Good morning. Good morning. We're going to be streaming futures, options, stocks trading today. It's Friday, February 3rd. Let me get set up here. There's Ryan Cohen news. Yes, there is. Hey, bipolar. Morning. Okay, let's see. Morning, Indy. Morning, Jeff. Morning, SHF. Nice. Morning, Access. Alright, let me tweet this out. .3% down. So I'm gonna go over this morning. I'm gonna go over what happened yesterday, and then I'm gonna just rid myself of it because it's not good to think about. Not good to dwell on that stuff. So. Okay, so yesterday I opened up that short on ES. Well, my emotions are already crazy because of GME, and it's just this flip-flopping, and yeah, it's like just being wrong over and over is difficult to deal with. Look, there's even an engulfing on the 5-minute there. Anyways, so I opened up a short on the ES, actually right here. Timed it beautifully, came down here. I was planning on just holding it because I feel like we could be at the top. And one of these times it will be the top. Definitely a temporary top, but quite possible to keep rallying. I mean, there's no signs of a reversal at this point, but it's just way overextended in resistance. We're not even at like much resistance, so it'll probably keep going. But a short-term reversal. But in my mind, I was thinking, oh, this is the top, which it still could be. Anyways, came way down here. I put a stop limit for it up here. Just one ES. This thing was, I was up like $2,000 on it down here. This was at a prior support, which I had drawn here. This had an engulfing candle. I knew if I wanted to get out of it, if I was day trading or scalping, I would have gotten out here. I didn't. Came up here, had this crazy bounce, and then after hours, we had Amazon, Google, all the big ones. And for whatever reason, we just had a huge wick up with Amazon, Google coming out. And I think just the fact they came out at the same time and had that wick, it just made this massive wick on SPY, stopped me out of my short, and then just dumped back to the lows, and now we're down here. So another probably $2,000 I missed out on there. So that sucks. Beating yourself up about it though, never good. Look back, reflect, see what you can do different. For me, I think, well, for one, coming into after hours is probably good to turn my stop limit off when there's big earnings, because I know it can get volatile. I haven't seen SPY move like that in after hours in a long time though, but I guess I can't remember last time there was all the big mega caps that had earnings after hours. So, but yeah, I mean, it's very simple. If it came up here, I didn't think it was just going to keep ripping. So I should just turn off my stop, let the volatility sort itself out. Yeah, so I think that's the main lesson for me. Like, because I still wanted to hold this short. I could have closed it here. I just chose not to. I wanted to hold it through till today at least. And it would have worked out better. You see, it's coming down here. So we probably had data that came out. Yeah, 8:30 there was data that came out that sold the market off. But yeah, turning off this, not having a stop limit coming to earnings. That was, it just happened so fast. I wasn't even thinking. It already had this huge rally up, and I'm like, wow, that's actually getting kind of close to my stop. And then I was watching Google and whatever, Alphabet. I don't know what was going on, but earnings were happening, and it just was too quick for me to even cancel the stop. Stop me out. Like, oh, I want to get back in. That's a whole another thing about getting in and out. But here we are. So I'm not gonna think about it. I'm not gonna go back on it. Gonna refresh, reset. Today is a new day. Start new trades. And yeah, we can do that with GME. Yeah, I'm not sure where it's going. I'm not sure what my plan is with it yet. I thought about selling out those shares. I couldn't sell it yesterday. I was gonna sell them out today. It's down 1.5% at open. I mean, the market's down big though, 1.3. So yesterday's candle's pretty bearish. However, the volume is increasing, and it was kind of on a breakout. So yeah, I'm not too sure where this thing's going, honestly. But I did close out a lot of the shares yesterday after opening them and getting just baked out and emotionally trading this. So that is just taxing, emotionally taxing. BY had that big move up, and now it's back to a negative 1.2. So there's my story. Good morning. Morning, Joe. Morning, Muhalalala. Morning, Hurricane. When they announce bankruptcy? I don't know. SPY calls looking juicy. You sell the calls? What? It's gone down. How does calls look juicy? You're long? I don't know if bankruptcy or not. Fell off today. I mean, it's already sold off. We're down 1.3% already. Open hasn't even happened. 6%. 6 minutes still open. I suppose it could keep coming down. Yeah, I mean, again, there's been no signs of a reversal yet. We don't have like a divergence. Our moving average, we're not below moving averages. Like, this maybe is the top, but to get confirmation, it's going to take some time. So my timing of the top might have been impeccable. I got stopped out on it, but it's possible we keep rallying too. Like, you know, could just be doing one of these, come down a bit, bounce off that 9 moving average again, and Bob's your uncle. We're back up high, 430. But yeah, there are new lows on the SPY, even in pre-market. Jobs report is brutal. So jobs are still strong. Is that what brutal is, or is bad news now? 30-day grace period. Bond payment reverse. I mean reversed. 415. Yeah. Yeah. I mean, you'll have an intraday move probably. 540,000 new jobs added versus 200 expected. Oh, so bad news is bad news. Or wait, what? Jobs added? So market selling off on, is that recession fears then? Since inflation isn't much of a worry anymore. January payrolls increased 517,000. Estimate was 188,000. Let's see. Earnings like you saw, people taking profits off this rally. Yeah. Jobs are still very strong. Okay, so it is an inflation sell-off. Yeah, okay. Yeah, that's a crazy beat on it. Because estimates were way lower too. Estimates were 188,000 in did 517, so they were way off. It's that kind of day that does move the market for sure, as you can see, if they're just way off on estimates. The surprises. Okay, so I'm gonna trade it slow again today. I don't want to rush into any futures trades, but if I do get in a trade today, I plan to get out of it today as well, because it's the weekend. I don't like to hold stuff over the weekend. Just those, just swing trading those shares yesterday on GME. Like, the amount that I was putting in and taking out is so big that it was like a big loss. Like, it was like a bad futures trade, like very bad futures day. But I did get puts on GME. I got long puts. I don't know. I just don't believe what's going on here. I mean, the whole market's kind of doing an unbelievable rally, I guess, so. 1 minute. Pre-market, we have Nordstrom. Brian Cohen, I guess, bought a stake in Nordstrom. PXMD is up there. That's one we followed also. You guys gonna go buy Nordstrom? I think I'll stick with these levels. Yeah, stick with these levels for now. Market is bouncing into open. So when did RC buy in? What was his price? Anyone know? GTI's what, big gap up? Can't get extended hours of GTI? Weird. Alright, market is ding ding ding. Get let me get this in here. Market's bouncing at open. Short Nordstrom. Yeah, it'll probably come down. Probably. Yeah, the jobs basically jobs is really strong. So that's good if you're concerned about a recession, but market doesn't like it because that's one of the data sets that Powell's using to measure inflation and how much he wants to cut rates or raise rates. So if jobs are still strong, he wants to keep raising rates. He needs to kill the jobs market. That's kind of his goal. Kill the jobs market, kill the inflation, slow the economy down. So usually good economic news, well, so far good economic news has been bad news for the stock market, but that will flip at some point. And I think we're starting to see it flip actually last week or so, last couple weeks. We were getting kind of good news is good news, and I think it's just because market starts to think inflation is not as big of an issue because it keeps coming down. Then they're going to start being concerned with more recession. You know, bad economic news is bad for the stock market, but it seems like it's flipped back the other way now. I don't know. Market's pretty rational. What is it? It can stay irrational longer than you can stay solvent. Something like that. Morning, Ace. Morning, Brad. Morning, Mark. I got lazy like that. No worries. We'll just listen to some more Sleepy Joe. Okay, now gas coming down. SPY, pretty big bounce from open. Yeah, I like these levels still. So we'll just see where it goes. Be patient. Patience. Nordstrom holding up. Mullen with a gap up. ASPI. I sold a lot of it yesterday, the swing, but I also bought it yesterday. Like I said, it's been this price action has been messing with me. So I still have not sold my long-term shares. That's what I was considering selling. I mean, the shares I was swinging, I was gonna swing for a rally, and then I was considering selling the long term on this next rally too. And if it does actually rally, then I probably will. Especially, whoa, nat gas is flushing. With Ryan Cohen doing the same thing with Nordstrom now too. Like, I think it's cool, but I think I'll probably treat it more as a trade. I don't need to have long term on it, as far as I can tell. 414 dailies at the bell. Nice. I have no idea. I didn't see any sources. I don't know if there was a filing or something. I'm assuming there was some. There, it's coming down. Assuming there was some sources because it did have a big rally up. I don't think the market usually does this. I mean, I guess it could, just on media, but yeah, I'm assuming it had a filing. Sources familiar with the matter say, thanks guys for your likes. These early morning likes really help out, so I appreciate it. It's 16. Just grab looks like some ridiculous values for company doing 14 billion revenue. There's a lot of good ridiculous value for out there right now. Market cap's 4 billion. Yeah, I mean, you're looking at value stocks too. Like, the PE on value stocks is going to be much lower than maybe what you're used to if you're looking at growth tech. I think they even have a dividend too, don't they? Yeah, so I've got a divvy and everything. There's no sources for it, really? Did no one look up the SEC filings? Oh, FUD. I mean, I don't know how that would be like FUD. That would just pump Nordstrom's price, which it's done. That's a good point. Yeah, that's true. If it's a small enough amount, he doesn't have to file. Yeah, that could be. Familiar with bird law. Where's he sold, GME? Oh, net gas through the floor. Always a good short. His Baba hole? Yeah, he had Baba a while ago though. That was just media circulating about it. It wasn't like new information as far as I know. Creates uncertainty. Maybe weak-minded people. Uncertainty? I mean, like what I'm talking about? Yeah, I don't have certainty in anybody. Especially not someone I don't even know. Jimmy pretty flat out the gate. Not much volume. That's a pretty far stretch for FUD. To say he's buying into Nordstrom and then it actually pumps. But it could be. I mean, the Baba thing did seem like some kind of a distraction because I think that was old news. BBY up 3.5. You can trust an RC. Oh yeah, I wanted to see what Lennox said actually. I missed reading that post. I believe in you. Don't believe in me. I'm a human, I'm flawed. Yeah, I want to check out Linux. Remind me later, guys, once the market cools down. Um So yeah, if BY can hold, I mean, like I said, if it can hold some of these levels, like really just need to see it start to find some supports, even with the volatility, as long as it kind of starts to show it has support. This like two, let's see. This is where I liked the support before. It's like 2.8, and then it made that inverse head and shoulders, and that news came out or whatever. Um, but yeah, if it starts to hold up levels, that's looking very bullish for their TA at least. The 4 hour, I mean, you broke through this little downward trend line I had there. If we can get some green candles up here, very nice. Got the MACD to flip bullish. On the daily, this could flip bullish today, or stay bullish if it stays green up here. Buy climbing back up through the gap. There you go. You could go long here. I'm chilling. Seems like it'll probably fill the gap, maybe even up to 415. Yeah, so this is why it's a good idea to close in the morning. This is what one of you guys was trading futures yesterday was talking about, and found that to be true also. If you had a big move pre-market in the direction you like on the SPY, like quite possible it will reverse once it opens up. If it opened up pretty flat, then maybe you'll get the move that you continuation. But if you've had the big move already, it's XCOB was an exec on Nordstrom. Yeah, I read that. I don't know what to make of it though. A BBBY distraction. Oh, not even G. We're past the GME distraction. Now things are distracting from BBY. I love it. I'm deep down this rabbit hole. What's up, Christopher? Good morning. Island top. Um, there's not a gap there though. At least I don't see a gap. I don't know if you need to have an actual gap. But yeah, I mean, the bodies is definitely an island. I mean, yeah, like I said, that very well could be the top, but there's no signs of signs. Yeah, I mean, to me, it was just we filled that gap, so that was kind of a gap I was looking to fill to go short, and it was on such a lofty day, just that it made sense that there'd be a big correction from that. This morning jobs, we're getting close to back where the jobs report came out. You may get a little move on this. Still low volume. I'm feeling bullish. You mean breakout? No, let's just move with the SPY. Low volume. Don't get excited. Tesla rallying. Yep, Tesla's squeezing. Nordstrom's holding up pretty well now. AI is continuing. Oh boy. Look at this thing, dude. Quite the move. Might be getting to a temporary top here on the SPY. Asking for a friend. Stock haters ball. Hate, hate, hate. I wouldn't short shares. I mean, it's already pretty low even. But yeah, you could do like, if you don't think, if you think it's going bankrupt, then you could do like leap puts. Um, but like I said, it's only at $3, so you don't have to do leaps, but a lot of time because this could have big moves up before anything actually fundamentally materializes. GME still melting up with the SPY, the market. BBBY not even feeling that anymore. I keep extended hours on sometimes in the morning just to see kind of an idea, especially if there's big gaps. So on SPY here, it's not bad. I could leave it off, but kind of like to see where the pre-market was doing. Still have that gap up there to fill, but this could be creating some kind of head and shoulders here. So I'd look for 415, maybe for a short. Might even fully fill that gap up 415.81 or so. GME 2%. Back to extended hours, see what's going on here. Late to the put party on BBBY. You are a bit late to the put party, that's true. Especially with the IV is super high, so if anything, I would do spreads on it. Yeah, Mullen is ripping a bit. Yeah, 14%. Chart looks nice. I'd like to see it break kind of his resistances back here, but yeah, you've got your bullish MACD and green over the 9. It's probably somewhat in sympathy to Tesla. It's massive move lately. Look, at almost back to 200 again. SPY coming down here a little bit. I think we just got data actually. Let me see. Yeah, I think we just got data at 9:45. Let's see. Here's what's coming out today. So this morning we had a lot of data. Non-farm payrolls, unemployment rate. This is what sold off the market, pre-market, non-farm, manufacturing, government. And now we have, oh, we just got services PMI. So that was that kind of red candle there. I think that scared some people. Give a little volatility. A lot of stuff at 10. Stuff shouldn't really move the market though. It's all commodity stuff. Soybean, it's all commodities after that. You mean 4%? So kind of outpacing now. This is all right. That's pretty good looking. That's volume too. That's pretty good. This is why you want to, for me, I want to shake off yesterday any emotion I had. Start today fresh, like none of that even happened, and so I can trade with a clear mind, basically. So if I like it and it's breaking out, still be finding along, not say, no, this stupid thing yesterday trapped me, I'm not gonna do that again, because, yeah, just got to reset and let that go. SPY, fill in that gap, but GME definitely outpaced there for a bit, which is a good sign, as well as this volume picking up. So yeah, keep an eye. I mean, this is kind of that same spot. See what happens if it gets up here. 24, 24. But yeah, so far as volume is increasing. 128. Yeah, it's more volume than yesterday in this first 15 minutes or so. I think, at least in the last few minutes. Settling down, but we'll see. I mean, that The outpacing of SPY to me is a good sign for sure. That gas is flushing. And then of course the price action. But now see, now SPY's going, it's not really. It might be getting to a level where it just, yeah, see, it's starting to reject. That's crazy. It's just getting to that level. It just doesn't want to break out yet. I mean, it still could, but see, that's kind of a interesting spot. Yeah, GME kind of rejected that pretty heavy. Wait, what's that line? Different time frames that the lines screw up on Webull. It's pretty kind of annoying. I'm gonna tell my brother Tesla will never be 100. Data's at 10. Yeah, we're getting more data at 10. 9:45 we had some stuff that moved the market a little bit. No, I'm gonna have to look at Linux's. You guys are pretty hypey about it. I didn't have time to read it yet though. I'll read it on stream. If you put another word in, be up 25%. Or bankrupt. That's a significant amount of volume actually right there. That last 5 minutes. I'd like to see it inverse the market though, or at least a heavy outpace. Because I'm not trusting the market to just keep ripping. $30 in a day. I don't know, man. Birds is up 8%. Gonna fight crime? No. The big volume, but it turned into a red candle. Punching through, yeah. Yeah, if you zoom out a bit, I mean, this is kind of that resistance at 24, 24. Because that was at support forever in that area. So, like, yeah, like you said, I think it's possible just that keeps acting as resistance, basically. IONQ. Like that's like the Hyundai car. Is that a ticker? Or no, it's Ionic. Yeah, that chart looks nice. Pretty overbought, and it's getting close to that resistance, but 1.8% on BBBY. Nordstrom's actually holding up pretty well. Okay, GME just coming back down with the SPY here. Thanks guys for your early likes, I appreciate it. We're at 30, well done. Market adjustment 7,500. They're actually kind of sick little cars. I like hate the crossover type vehicle, but those are pretty sick looking cars. I'd rather just like a normal small hatchback, but yeah. Hyundai honestly's got some pretty pretty rad styling. And they can, because they don't have this long baked in image of what they should be, so they can kind of freely move around and they won't really lose a customer base. You know, like a Ford or BMW or something that already has this this image and this style that people are familiar with. They couldn't totally change without losing some people. They don't make good hatches. Yeah, I suppose not. Yeah, they'll all turn into crossovers, so you gotta get something a little older. 12 years old is like new to me though. All right, get caught up on some of this news. Global composite PMI actuals 46.8 versus 46.6. Pretty close to expectations, actually. Canada summoned China's ambassador on Thursday over balloon incident. Oh yeah, did you guys see that? That balloon that's supposedly from China. How little news is there really if we're talking about balloons? Maybe from China. Tesla vehicle sales in Germany surge. Yeah, I think that the payroll is the big mover today. That was all pre-market. And GME volume is tapering some. Nirvana coming back up. Pretty overbought still. GNS doing well. GNS is even coming up green. This is held very strong, honestly. I mean, it's ripped, it's consolidated, it's ripped, consolidated. We're on a rip consolidation now, I think. SPY is just moving up with VWAP. It's pretty high VWAP there. GME grinding up. Could be a topping candle, but since we're so close to VWAP, probably not. Volume's slowing down a lot on GME. So you started to pick up there to just shut it down, right? We got all this volume at the spot that needed it to go up, and it just used it to shut it down. BuzzFeed. Seems, looks like it might be bounced on a fib level here. See, this is 50. That's the 61. Might actually be a good play. Not options. Jeez. It's a SPAC, yeah. So you got the SPAC curse. Might grab a position on this. This is moved regardless of the market. Come down, the market's been going up, so. GME setting up and engulfing. Let's see if it finishes. Got 2.5 minutes on it. GTII. Still rallying. Timber Pharmaceuticals. Had a reverse split back here. Ooh, phase. I've got capital now. Let's see. Got in the long term, which I don't want to be trading with. But yeah, I wanted to get phase yesterday. I think I had everything still in GME. Like this one. Let's see. I think I like BuzzFeed, and I think I like phase. When does the hot money rally end, though? Seven CSUV crossovers with the left. That's sad. There's wagons there's still some sick wagons, right? I guess not like new ones. Yeah, my long term I've got dividends. I have not seen Amex. China balloon. I don't know. There's just some balloon. I just saw the headline. Some balloon was spotted. Like a weather balloon, like a big one. Apparently it's from China. And they're spying on us with it. I don't know why they'd have to use a balloon. They're in all of our phones and TVs, and why do they have to send a balloon? Send a GME candle through that Chinese balloon. Department of Defense sent a statement. Russia flies. Because the balloon is visible. Yeah, I don't know. Pronounced Gina. Oh, yeah. Here's discussing acquisition in their last earnings call. What do you think of acquiring here? Really cheap company to pick up. Spies selling off. Oh, that data came out. I guess it affected. Strong services data. But market doesn't care really. Okay, I'm gonna close out of these GME shares that I was swinging. Yeah, we got that engulfing. And might grab phase or BuzzFeed. Yeah, I'm gonna get a few shares of phase. Okay, got some shares of phase. I'll put it on Discord. Just a swing. Might put a stop on it, maybe down here if it breaks this. I'm not sure. Not sure yet. And actually, they've been so long since I've just like traded shares on stuff other than really GME. I forgot how to do this, but I like to look at what's the most red on the day and see. You know, these game stocks, these might still have a. I don't even know what really started this catalyst, but they were going insane. Yeah, as far as acquisitions, I don't know what they're referring to. To me, it makes sense if they bought Funko, since that's like their number one. That's like where they make all their money. Let's see. Yeah, I went long on that gas. Look like it looks like a bottom, and it's got some volume there. Yeah, Funko, or I guess Newegg would be another one. So yeah, all these game stocks are still selling off. Here, I mean, they already have kind of their own. GameStop has its own brand, own like kind of white label brand, and I think they even sell headphones. So they could do here. I don't know what the market cap is of that. Yeah, I don't know if that. I don't even know what triggered that, so that's a little more sketchy. I guess I don't know what triggered phase either, but the chart looks less sketch. What else do we have? BuzzFeed I want to look at. Spies bouncing off a VWAP now. GME moving up with it. Bought some 4 calls expiring today. Has PlayStation New York and Canada because that makes sense. Do they? What? One place really get in the way of sniping pennies. Probably to loan out. Is that a new filing? BlackRock bought 7% more GME. Fanatics. Yeah, there's that NFT gaming IPO that's coming out. Yeah, it looks like a nice little intraday flag here on the 5-minute. Buy is just volatile, jumping all over the place. I use all time frames, but I mean, what you usually see here is 5-minute. But I mean, I use hour, daily. Those are the 3 most common ones I use: the 5, the hour, and the daily. 4 hour. Sometimes a 1-minute. RC is buying all companies, buying all the stocks. 150 million market cap. Oh, really? Here? Wow, that's pretty cheap. Yeah, maybe. Me calls around $800 out, $50. Sell. Sell. um BuzzFeed's kind of chilling. I like this tick up on the RSI down here. And then this volume this morning. I could give it a little more time to really see if it's gonna find a bottom here. Morning, Wayne. BlackRock 13G says they bought 7.2%. Didn't have any effect. Big data money maker. NFTG open on the 10th now. Keep pushing it back. I think that's what we saw yesterday for that NFT game stock. Buy is volatile this morning, man. Yeah, the ISM index rises. That's what kind of started this little sell-off. Rises to 55.2 versus 49.2. Estimates were 50. Biggest monthly gain since June 2020. 10-year treasury yield up 14.7 basis points after that ISM data. Yeah, so it's been bearish news on the market only today. And yeah, we've had a pretty good bounce. Breaking through VWAP. Coming back down. AI's holding up nice. Mullen. SoFi doing? I've got these SoFi covered call. Oh, it's in the money. Whoops. My puts are down 30%. Wow. Big wicks down there. Big wicks. You a big wick. GME moving up. Whoa, a storm is blowing through right now. Weird. Oh, SPY is coming back down. And I want to look at Linux's thing. It didn't remind me at all. They increased their stake by 7%. Yeah, they increased their stake by 7%. That's right. GME moving up here. Haven't borrowed anything from my IKBR to a sign of a run. Doesn't mean to me that's a sign of a run, but yeah, I see 500,000 shares on here. 19.4 still. It is moving up right now. Yeah, it's looking bullish. My sacrifice will be remembered. I'm down for a big rip. I'm gonna do some cover calls, I think. We get a nice big rip. Be patient with it though. Very, very patient. Okay. I better read Linux's post. I gotta see what's going on here. Jamie is moving up. This is a move I like to see on GME because the market's not doing the same thing. So this has much more weight to me. And next we'll just have to break this resistance. I mean, volume would be great, but that might not happen until we get to a break. But yeah, so far that looks pretty nice. Up 4.5%. Very strange price action on GME though. So it might just be a leading indicator to SPY because now SPY's moving up. Right? We've seen that. It was leading it. GME's pulling the SPY up. SPY ripping off the VWAP. Back into filling the gap, it looks like. GME was getting excited there for a sec. Okay, Linux. Oh, Linux has a little visit. Excuse me. Linux has a little visit to 20 first. Well, that hasn't happened yet. Then lift off to 32.5, then back down. I think I've caught the next GME run. The data has been extremely unclear for a while now, until yesterday's data came out, which shows a strong signal for next week. I won't share the data or price targets here as not to risk things. Next week, there's a chance it runs. Okay, let's see here. Severance signal company is what it says. My options give me stress. Just got me some phase. Oh boy. Full calls too early. I didn't get the SEC form. I've got enough emails coming in. I don't need to get emailed for GameStop. Yeah, there's not. Oh, there wasn't volume on GME. This is starting to pick up now. It's gonna need some real volume to break through this resistance. SPY is still going though. It's filling that gap. Linux is all over the place. Well, I mean, to his credit, the same thing I've been struggling with, he has been struggling with too. I don't know where he gets his data or anything, but yeah, I have been flip-flopping a lot, and it's not fun or easy. Feels awful. Because we don't have confirmation of either a retest down here or a breakout, and it's doing exactly in between. One day it's this, one day it's that, so it's, yeah, I don't fault him for that. Vague enough to be right. He's not actually that vague though on this one. He's saying it's where it's going to go to first. I don't even say that. He's saying quick test of 20 and then go up. So maybe he's looking at this channel. Yeah, that'd be right at this channel. Just thinking one more test on this channel, and then if it does break on the next rally up, then yeah, I mean, I don't know how high. 32 maybe. It says 32.5. Maybe he's using fibs to get to that level. Nope. I'm gonna keep reading it though. SPY filling that gap.
There's a huge storm coming.
There's a huge storm coming. Yeah. He doesn't want the yellow fountain people. Yeah, it's for sure. SPY ripping, filling the gap. Just started building out my real value. That's good. Mark. Yeah, I remember your name from years ago, probably. Almost green on my SPY calls. So GME is not getting the push with SPY yet that this has had. It's right at that resistance again, but it is looking like a bit of a bull flag. Volume is pretty good. SPY is squeezing again. Morning, Sunro. Technically it's Feb 10th. And then rip. No, it's all right. Let me finish reading Linux's post. Next week. So he says next week there's a chance to run. I don't know if there'll be enough time to buy on Monday or whether one has to buy today on Friday. If you're buying shares, buying on Friday should be fine. If you're buying options, the weekend theta and possible consequent IV on Monday will ruin you. You literally open it Down 80% loss in weeklies. He's always playing weeklies too, dude. This guy. Obviously, this means other meme stocks will go up too, and so will the market as well. Right after this run is concluded, the market should finally do its thing and correct itself. So he's calling for a big Green Friday, pretty much, sounds like, which I could definitely see happening. I think we've had like 8 Green Fridays in a row, like solid Green Fridays on the market. No positions yet, considering an all in here. Not sure yet. And when to buy and what to buy. 85%. Made up number, not based on any statistic. Confident in this one, maybe 80%. EDU, the signal comes at a moment where the market is overbought and the whole market is due for a pullback. Buying here is not normal. It is the opposite of normal, and a person with half a brain would tell you that too. True. Regardless, the signal for a run is very strong. Imagine seeing a GME run in a dying market every time. I don't know if I have the balls to go for this one yet. I don't know if a run in a dying market. I think they let it run at the tops of market peaks, right? So GME will get like the last day or two, and then the market will shut it down. The market's had a frothy run for a month, and GME will just get like 1 or 2 days of it at the very end, and then market will stop, and that'll stop GME's rally. My own logical opinion, buying today is a mistake and you should wait and buy on Monday or Tuesday. In my illogical opinion, you should buy today. I'm likely to do one of the two. I have no idea. The two sides of my brain are fighting over this. I mean, I can show you the chart. It's not like, doesn't mean a whole, he first thought we were going to test 20, but we haven't done that. Then lift off the 32, then back down. Yeah, I mean, yeah. Oh, that's it. That would be our cycle, and then top of the cycle, we come back down. That part's pretty straightforward. The test on 21st, I don't know about that, and if it actually happens next week, maybe. Let's see. I want to do covered calls, but I don't know. I've got to fully commit to them. I can't be jumping in and out. Oh wait, we got a bull flag there for now. Quit trying to time the top. I think that's been part of my problem, trying to time the top and not just waiting for the momentum and being satisfied with less gains on it. Moon Boy season. Throw some balls and go long. What are you guys talking about? I just love the weeklies. Up 170, nice, well done. $20.28, baby. Wait for first red on the 5. Sorry, got excited there. Winter in Texas was bad once every 8 years. Sell your calls. I was saying 40 to be honest. Sold all my 22s. Nice moon. Sounds like you're doing well. Yeah, spies almost filled the gap. Broke through that resistance, which is pretty bullish. To me, that could have been a shoulder. Looks like we're gonna have another big green day on SPY. Negative 15 in Boston tonight? Well, frick, Nat Gas, go. IPPO, what's the filing? Is that 13G you just shared? So GME's up 2.5. BBBY is down 1.2. Nordstrom's holding up really well. BTI. AMC's up 7. Wow. BuzzFeed's up 7%. I thought about getting some in this. Yeah. It is looking strong. It looks like it is bouncing on that fib level. Might get some of this too. Could have done it sooner, but I wanted some confirmation of a move. I like it. Buying it right at the high, so if it doesn't break out, probably come back down to VWAP at least. But I got some BuzzFeed shares. So if this is doing an ABCD pattern, it's like A, B, C, and then D would be, I have that the wrong way up there. I'm not doing options, it's just simpler to do shares, and the IV on these is insane. The next move up would be 6,350. It's following those fib levels. Let's see if that's not really at a prior spot. So maybe a retrace back up to its highs, we'll see. It's like 370 is kind of a resistance, 394 this kind of whole area. And then of course the top of these should be like 5.7. Put just a couple levels in here. See that there. SPY is still ripping. Okay, BuzzFeed breaking out there, which is good. Phase still kind of consolidating, but I like this chart. There's General Motors. GME just holding up. It's a nice looking bull flag though. It's like 30-mile-an-hour winds outside right now. Holy smokes. Yeah, it's just seeing GME move with the market like this is, yeah, nothing's explosive yet. On its own, he's going its own. I love AMD and Wayfair. Wayfair's had a crazy move, hasn't it? What was that? Yeah, pretty crazy. This might be a good spot to short, but wait. So yeah, fully filled that gap. Fully filled that gap on SPY. Back to the pre-market. Not high, but one of those highs. APRN even getting some action. It'll probably be pretty quick, these shares. I mean, not today. I don't think I can actually close them today. But next week, I think we could be getting to a top pretty quick. So I don't know if these will have momentum without the market. They'll be pretty quick to close. 335 is a good deal. On BBY, it says Hurricane Buildings. They're buy GME in 2020? No. Tesla doubles value 30. I know that move is crazy. So much money. So much money. $1 million shares to 21 million shares. BlackRock increased their position. Thanks, Brad. Loans them out immediately. Most money made on GME shares. I'm out of my net gas. Small loss. GME is just stuck up here. Yeah, the divergence on GME have continued, but I think it's throwing a weird signal just because of this ascending wedge channel thing we're in. So, not to say, I mean that's why you have this, is for when this happens, but some time frame is not really showing, so I think that's maybe why it's not, doesn't hold as much weight. Except team that refuses to own shares. Okay, so instead of shorting ES, I could just do a cover call on GME at this point. I think this is the top. Now SPY's starting to consolidate up here. Yeah, the volume, that's probably a good point. The volume is throwing things off with it. The inconsistent volume. Yeah. That is really screwing stuff up. ET. Energy transfer? No. Alright, looks like SPY might come down. That candle reversed. BBBY down 2.7. Yeah, I might take a cover call here on GME. Maybe I'll keep waiting, I don't know. Humans talking about the weather. Classic. Eating a little bit of food. Thank you guys for your early morning likes. That's dope. 38 of them. Nordstrom's holding up well. AI that wants to keep going. GTII. AMC almost 10%. Wow. Fallen, Apron. Speed's looking pretty good. Yaz is on. Time to rip. Maybe. Thanks, Mark. Appreciate it, man. Looks like Spy wants to make a new high there. Alright, it's 10:30. Is that long enough to wait? Yes. Jimmy's coming down, but Spy is still holding up. I don't know. Spy's moving up. Jimmy might flip this back green. What the heck? Oh, good. I accidentally bought a calls. Great. Dude, what is going on? Put a market order and the market just changed. Oh my goodness. I hate options on GME. I literally put it on the market, hit send, and then they just move the market down to 2 cents. GME should come back up here though. Spy's moving up. Not though. Interesting. Dude, this is... Gosh. Platform's tripping out right now. Bye, ripping up through that eye. Talking about... I'm not able to enter this order. Weird that GME is inversing to the downside. Okay, trying to get out of these calls. It went long, so when I changed one thing and then for some reason it changed it from sell to buy. I missed it. And then it combines with all these other options I have, so it's hard to even find them. Okay, I'm out of those calls. Cost to borrow over 1,000% on threshold list. GNS is ripping. Oh. Oh, you hope it does. Got an RSI divergence here on the hourly. And on the 4 hour. This might be a top for it. At least consolidation. Like we've seen on it, it's ripped up, consolidates for like 4 or 5 days, and it rallies. So had the gap up. Did it for 3 days, had a gap up. It's 2 days now, so maybe a couple more days, or maybe it actually comes down some. These highs have been making lower highs in the RSI 4 hour here. So I wouldn't be too optimistic about that. Under no circumstances was I expecting this rip. No, yeah, bulls are taking all the bad data and buying it. Buy. Apple is on a moon mission for sure. Okay, that green candle. Got some covered calls. I just did some dailies. Yep. SPY moving back up. GME also. BBBY not feeling that. Now GME's starting to wake up. Okay. Yeah, SPY's about to go green. So yeah, I should have just day traded that contract yesterday on the future. Market really favors day trading, it seems like. For a long time it's felt like that. AB ABCT went bankrupt. Oh, this. $420 daily is in the money. My 414s and 470s will make my week. You've been saying that like every day this week, Hurricane. Doesn't sound like your week's ever gonna be made. Yeah, a little intraday bull flag. Yeah, on the daily, that's what you're probably talking about. Yeah, that does look nice on Lucid. Good eye. Options are still pretty lofty. Yeah, this could be a good one. Ace, I like it. Good spot. How long does this exuberance last, though? And how much of that is from Tesla? I don't think Tesla has much more to go. I think this 200, it's... I mean... Yeah, it's getting close to resistance here. But that's just me talking myself out of it. It does look good just on its own. Watch any Richard Newtons? That was cool math teacher. 20,000 GME position, nice. No, I haven't seen him. At least I don't recognize his name. Maybe I've seen him. The volume dropping on it, to me, that's not a bad sign at all on a bull flag. I don't know why volume would be increasing through consolidation. I feel like the volume wouldn't come until you break the bull flag. Spies coming down. Kind of had a double doji there. Might be a top. GME MACD flip bearish on the 5-minute. Still below VWAP. We do have this red under the 9. AMC still going? Still around 10%. Oh, and SPY's reversing that candle. BuzzFeed's breaking out. Might have to wait a little longer for the phase move. $750s for next week. GME inching up. What is crazy is last Friday how they rallied GME. Not expecting that again, but I don't get. Maybe they did all the hedging on the Friday because we didn't see much move. T+2 from that at all. An updated bull thesis, like fundamentally, I guess. Nice. Coin is moving up. This thing's more than doubled. So many charts look like this. I don't know if you guys are remember, it was like so many charts look just like this. I'm like, all these charts have this rounding bottom and look bullish. Here we are like 2 weeks later, and many of them have doubled since then. Except for GME. It didn't have that rounding bottom, it had this weird V, and then it just consolidated. Straight across into close. Yeah. Yeah, I mean, the grind up is fine for shares. And some option plays, of course. Alright, see if SPY, let's see. This candle's about to close, that'll be engulfing at somewhat of a resistance on this other high. Might be a good short there. Yeah. I'm taking it. Probably not the same volatility we had as yesterday. After the last 3 days of volatility today, I'm imagining being somewhat chill. So, not looking for a huge winner here, but see if we come back down. I mean, all the day today has been bearish. Market's just ripped. Yeah, I've wondered about playing AMC with their dilution coming up. AMC puts and ape calls because they have to be equal, right? Yeah, definitely could. It is early. It's 10:50. I'm not thinking like a move like this, but we've got EU close in 40 minutes. Just candlesticks and resistances would indicate this is maybe a top. That's all I'm driving at. Maybe it's just the top to move down to this support right here, where I have that line drawn. BuzzFeed's doing stuff. Yeah, so that's a nice little bounce off that fib level in Buzz. It's dumped to $4 in pre-market. Yeah, it was a big solid pre-market. Expiring GME gets past 2350. Volume is looking like it's getting turned off here. Maybe. We've got bearish MACD right into the 9. See where it finds support. It's crazy what days. I haven't done daily cover calls in so long. They change in values so quickly. Jim Cramer admit twice on here that GameStop was rigged. No, I haven't. No, I don't think I've seen that. Something old, I'm imagining. So it's not a great resistance for a SPY hit, like not super strong, but it could be. I mean, a double top up here would be a nice short, a nicer entry, but this could be all we get. I don't know. So I might actually close this even at VWAP, just get back into that if it makes it there, I suppose. GME just low volume gapping down slowly. Is it killing our other plays? A little bit, yeah. BuzzFeed settling down. Phase is flat. Could still get another pump later in the day. That is definitely true. GME coming down. Yeah, it wasn't a good sign, this big wick up here and all that volume. The consolidation was nice. It seemed like it could have went up, but I think it's too high on our little channel here. It doesn't want to break that yet. So this is where the move back down to 20, I think Linux is talking about. 20-ish. Portion, what does your long holding before look like about your trading accounts? I'd like to have most of my money in my long-term portfolio. It kind of got convoluted because I have a bunch of GME shares in my trading account. So, and that's just options trading. This other account, I don't know. I've got 4 accounts. This one I'm not really trading on anymore. I'd like to think, like, it depends on how risky you're trading, but I've got one I'm just trying to do like theta farm on, so that's really safe. And the more risky stuff, like a very small allocated, maybe like 5%. And then the theta farm, I don't mind having a lot in there. I'm active. I'm so active. Like, it's not like I'm passively trading that it's tough not to use more, but use more, you lose more. So okay, 30 minutes till EU closes. SPY just wicked down here on this one. Okay, I'll probably put a stop limit on my contract now that it's in the money pretty good. And then, what the heck? Oh, never mind. I guess I sold it. I thought I was putting a stop limit. Oh man, I'm sloppy. Uh, 182. What? How did I get such an awful fill? Oh, 4179.75. Well, I closed out of it. Small profit. Oh well. That wick is actually kind of, yeah, that candle is pretty bullish. Maybe it was a lucky sell. Recent K asked him a question live about him saying how crypto is rigged and how is that different than a market rigged? Market rigged in GameStop, and he had to elaborate later and said, of course, GME is rigged. Oh. No. It's not like the narrative changing. But yeah, I guess that was a good time to sell. So I would have just been stopped out here. So a little move down to that support and right back up. But not necessarily new highs yet. Look at that Intel to my long term. Yeah, Intel's gonna be a pretty safe one. You're probably not gonna get much growth with it though, right? Um, they are they still giving a dividend? They are, right? Yeah, I mean, for a long term, this is probably depends on what you have allocated for growth and value. If you need more value, then I would go with the Intel over like an AMD because you're not gonna get a dividend with AMD, and it'll probably outpace it as far as growth, but well, it's most I wouldn't say it's as stable as Intel. 4.5% still. Nice. And you could just look at the pricing on them. So yeah, a little move down and we're just right back in the races. At 4.5%. Oh, a value trap, not a dividend trap. Is that the same thing? Value trap, dividend trap? I mean, you have to just ask yourself if it's on its way out. Right? Will it be here in 10 years? Will it have market share? Something long term you don't want to think about or sell in, a year. You want to, at least that's not how I do my long term. Really, I should say under a year, I guess, but at least a year. But more like 5 or 10 years. So GME not getting any pump here with the SPY. I did an awesome accidental trade. Oh yeah, I sold out of my NRGV. Yeah, I've retested on 418. I don't know if we're gonna have enough time today, but that might be a nice another short entry if we do get up there. GME is frozen. The daily to cover calls are up. Did I open these ace? Opened them like somewhere around VWAP here. These are daily, so they're gonna move much faster, but they're up 45%. And our paper covered calls, curious on those. All this volatility up and down and up and down. So that would have stopped me out there, but look, it might have just been a fake out. Looks like it was. All right, here's our paper account. 100 shares. We sold a covered call. Remember, it was down like 160% yesterday. Today it's only down 108%. It's still out of the money, but the reason, because we got such a bad fill, and just my timing on filling it wasn't a time you usually sell them. So if you're awful at selling covered call timing, I'll show you how it still could very well work. Now, if we get a run next week, this is going to go down a lot more, but you're just waiting until that expiration. That's all that matters where it is at that time. Oh, now it's coming back up. Okay. But looking at this channel, you could say today would be a good day to sell a covered call. This was a good day to sell it. You can close it here, sell it here, close it here, on and on and on, until it breaks out one way or the other. But that's if you're more actively trading it. I mean, I did this paper one as more of a longer term, monthlies. SoFi is on a tear, man. Wow. I sold 7 covered calls on here. So those are in the money, but got nothing to worry about because I actually sold monthlies. Could have sold them for a higher price, but no way of knowing. Did 7s. Guess because of that resistance. But this has actually done quite a move. Yeah, that's doubled also. Wow, AI today is just big candle. JWN, Nordstrom. It looked like it was holding up pretty well on the 5-minute, but if you zoom out, it's actually slowly coming down. All those Ryan Cohen algos taking profits. I think this BuzzFeed play might be good. I like that it's bouncing on this fib level. And that is actually support back here too. Paper calls? What about them? .81% of people think taxes will increase this year. Fed swaps price in peak Fed policy rate of 5% for June. Average credit card interest rate was 20% in the third quarter of 2022. Okay. If Sternlicht says if Powell keeps hiking rates, who's Barry Sternlicht? Powell keeps hiking rates, he risks the entire financial stability of the global economic system. Presence of balloon in U.S. airspace is a clear violation of U.S. sovereignty. U.S. directly communicated with China through multiple levels once balloon was detected. So I think that's still a good short, but I closed it. Google invests 300 million artificial intelligence startup. Anthropic. To buy a median price home in the US, an average person would need to make about 107,000 annually, up from about 74,000 a year earlier. Biden hails the jobs report, waves off inflation question. It's true, Ace. It's true. The long-term cap gains was stuck in my head, and yeah, if we did have a squeeze, it would have been nice. Mythic Repro. I think it's time to hear from our little Sleepy Joe. Saying how good of a job he's doing with inflation, and it's not his fault. And the jobs data is super great. The economy is strong. Let's hear what he has to say specifically to us, the happy crew.
Hey, Happy, it's President Joe Biden here. I just want to let you know I was cruising through YouTube, just checking out different channels on the economy and such, lighting up a blunt here with the missus, and I stumbled across your live stream. It seems like you got your head together. It's in the game,
It's in
you
the
know.
game, you know.
You got kind of like a band of merry misfits that's following you, and that's all good and all. About your natural gas trades, I don't know if it's going to affect anything or not, but we're developing nuclear fusion, and that's just coming around the corner here. So you might want to watch out. Yeah, this is not. It's not insider trading. If a president tells you, it's fine.
It's fine.
Yeah, shout out to you and your band of merry misfits, and good luck on your trades. I'll talk to Gary Gensler about fixing the stock market. I heard there's been some malarkey in there with GameStop and such. All right. Yeah.
All right, SPY is moving back up. Consolidating. GME is not feeling it though. It's on its way down. Yep. Mr. President stopped by. Shout out to the Misfits. Now GME is inversing it. So that guy Donnie that lost all that money has lost 48 billion of his personal wealth. He was the third richest person in the world 2 weeks ago. He is now the 16th richest. Casual president flex. Rick. I don't watch that show, so I wouldn't relate to the boys too much, but do it, do it. That gas looks like it double bottomed here. There, I'd take another trade on it. This thing is just, I really should be looking for shorts. Keep not looking for a short entry for some reason. Every day it comes down more. So it actually broke the low. Look at that. The low from 2020. I think it would track the same UNG as far as the actual futures. Up 806. That's the cheapest it's ever been on a UNG at least. Is this the all-time low of natural gas? Certainly not. But since this ticker started, it's 2007. What? That's crazy. I mean, I would do Trump. Fine, moving back up. Yeah, this is all-time low on UNG. EA, it's in the game. That's the guy. That's his voice. EA, it's in the game. Yeah, I don't care. Whatever you want to do, man. BuzzFeed grinding up. GME looks like it had a little green candle before we abandoned it for other charts. Wasn't this just at 0%? Oh, double top on SPY, maybe? What just happened here? Yeah, this thing's crazy how it moves. So sporadic. Just moved up 12% in the last like 15 minutes. Wow. TJX? Yeah. Yep. Yeah, any of the cheaper department stores. But I think that's starting to get priced in already, you can see. The values, I mean, honestly, like, it's such a quick whipsaw from value to growth right now. Value's already kind of taken off. Growth was cheap like a month ago, basically, and then a lot of the growth is like doubled. So now I feel like it's just almost a waiting time for both of them to come down with the market. But I do like that. Yeah, TJ Maxx, Target, like even dollar store, like what, Dollar Tree. I mean, Walmart's a good one for that even. All those good value ones. Mullen's still going. Yeah. Look at these little candles on GME. You and your penny stock covered calls, Don. HD and lows. I know, I was gonna say HD and lows. I like HD better, but to me, I don't think HD will do as good as say a Walmart or TJ Maxx. Because people working on houses and spending money on their houses. like will come down. Or there's the argument, oh, more people themselves are working on houses and they shop at Home Depot, and maybe some contractors wouldn't source Home Depot. I don't know. It's more of a retail store, so more people are doing it themselves. But I don't know if there's much argument there. I mean, I don't know really. I think most contractors I've heard of still use Home Depot. So, right. Mullen is a solid company in EV space. Much good news with it. They also improved the inverse split in case they don't regain compliance. How can you say that? Solid company in the EV space? I went back down here. My brother's working in the space and he realized, yeah, like I was saying, all contractors I've come across just shop at Home Depot. But in a recession, I feel like a lot less money is being spent remodeling or working on houses. So that one, I would probably be more bullish on, yeah, like Home Depots or TJ Maxx's, where people are getting food and necessities. But still, HD would be better than some tech or growth, I would say, for sure. All right, SPY little double top coming down. See if it breaks that support. Yep. Breaking that support. Don't think I really want to take a short here. It's just too small of a range so far. Just chill on it. I would like a rip up here to go short. We might still get. I mean, this yeah, looks like it's just finding support. Still bull flagging, consolidating. Yeah. Yeah, I remember during COVID, like everybody was remodeling their homes before lumber went up like crazy. And even after it did, everyone was still remodeling their homes. All this free money. They're sitting at home, which they never have done before. They've always sat at work. And they're like bored and there's stuff they want to do on their house. Now they have money. Let's remodel. I think like 5 of my almost adjacent neighbors. Yeah, I've got a lot of neighbors. Kind of have like a corner spot here, but most of my neighbors were doing some sort of addition, not even remodel, just addition, like building new decks, patios, just putting fences, like just doing all sorts of stuff. And then the lumber went super high, and they were like halfway done, and they just kept. I was like, "You guys are crazy buying this lumber for these prices." GME GME ain't no AMC though. Let's be honest. It's definitely true. Building materials have come down a lot. Now lumber prices are cheap, at least lumber. GME has just been in this range. As far as just TA on it, yeah, it's just ping-ponging back and forth in this kind of channel. It's been building for, these are hourly candles. So this started kind of at the beginning of January. And so we're looking for a break to the upside or the downside, but until then, looks like it'll probably just stay in this channel. It's kind of ascending channel. Longer time frame, it's a little hard to read. The volume's been kind of crazy. This is an unusual bottom for GME, as far as I can tell. Usually on our bottoms, we've had a big increase in volume and then a double bottom. We haven't had that, so that does kind of lurk in my head that we might still get kind of a double bottom. But everything's changed since the split, and maybe it's not going to do that anymore. So thank you for your like, Rocket. I appreciate it. We're at 41. Thank you, guys. All right, SPY's moving up. Bull flag confirming. Mullen's holding up there. Nordstrom's bouncing finally. AI is just on a grind mission. Birds 7%. Don, what do you still have your EVTL? Did you get calls on it, or what'd you do? Get shares? This chart looks pretty ugly with that engulfing red candle, but then I saw these two double dojis and I saw that volume. I'm like, maybe this is a bottom, an actual bottom on it. The volume has stayed pretty elevated, which seems like it's accumulation of shares at least. Bullish MACD. Maybe even a time to add to it. Might add on this. Mark going? Yeah, Mark's chart looks pretty nice. This Mark and what? Fun was the other one? Kind of at that double top here, see what happens with that. Yeah. I haven't looked at EVTL actually. I might want to add here. Has it done this? Yeah, I guess it has done this before. Kind of found a bottom, increased volume, and then bleh. What do you think about this chart? You think it's still going to rip up, or did break through that low? How cheap can this thing get? Oh, market cap still 438 million. Wow, still probably way overvalued. Might add to EVTL. I don't know. Okay, EU closes in 3 minutes or so. Might have a direction here on the SPY. Last couple days, I feel like we've rallied after EU close. Yeah, that's what I'm thinking. Maybe average down a bit. I'm down like 11% of my shares, but I only did kind of half of the amount I was going to allocate. So I guess for a time like this. Mark is an AI company? I didn't even know that. It was Mark and Fun. I'm surprised this happened had a bigger move with AI going. No sympathy there. Fun has done pretty good. This chart looks similar to GME without all the chop, much smoother, but just had that kind of V bottom consolidation and now breaking out. I guess GME kind of had that range up here. This is giving us head and shoulders. Nice. Actually like this chart better than Mark's. Good. I feel like we're kind of at a top on the market. And this sketchy stuff is going to probably come down. But maybe a couple more days. Maybe today. Maybe Monday. Because I think we have Powell again next week. If he's dovish again, man. I like what he says. 425, 428. Incoming. You mean slow motion? Yeah. Volume is tapering. Oh, that's BBY. Yeah, the first hour is pretty good volume. Died off pretty good the next hour. 1130, 500,000. Yeah, see yesterday, this is what got me going. Was this 2.2 million on the second hour. The 2 million in the first hour, 2.2 in the second hour. Today is much weaker, 1.8 in the first hour, now 500,000 in the second hour. Buys moving up. That gas actually bouncing maybe? BBAI. That's been a while. Wait, I don't know if I've actually messed with this one. Look at that chart. Holy smokes. What a mess. What's this from? All right, SPY new high. Right? Yeah, new high there. So if you were scalping cover calls in GME, you could say close them now if you think you're going to be in the money by end of day. Guess I could close them and reopen them. I don't know. Or just hold them. It's just it's low volume today, which is not a good sign. Even a lot less than yesterday, so I might just hold them, not even try and scalp them anymore. They're up 50%, but all right, so less rallying from that. Yes. That's what we need GME to do. SPY calls ripping. How are they ripping? It just barely moved up. Pickleman? I'm down to hear any TA. I don't trust or not. I like to hear different people's perspectives. What's he saying? Someone here was saying he's gonna be or tomorrow or he said for, I think today and then Monday would be big ups. Sometimes I have to shield myself from too much outside information and news so it doesn't skew my own ideas. Because that definitely happens and you need to protect your mind. But feel pretty secure, I guess. Juvenile. Oh, just in general. I thought you had something to share. He doesn't really do TA. He, from what I've seen, he's looking at the data that he has with the options and the FTDs, and I don't even know what he's talking about half the time. But I've hardly seen what's this? Whoa. I sold some. I mean, yeah, I guess I've seen very, very light TA, but not really any TA from him. Yeah, he's always looking at like the options, and then not necessarily just TA on the chart, which is good. I mean, he knows a ton about that stuff, a lot more than I do. But I think he's missed at certain times where he's looking at that data and not seeing like pretty obvious TA. But I've also missed because I've looked at TA and not much else. October OPEX. Every week is OPEX. Actually, every week is OPEX. WOPEX for GME. Here we go. Spy's moving up. Let's look at Hurricane's TA. See, Hurricane looks at the candles on the 30-minute, which is actually kind of interesting. So 30-minute candles, if they're green, it's going to keep going. If it turns red, he sells. I'm being serious. I mean, it might be a little goofy, but yeah, I mean, that's the way you do it, right? The 30-minute. But then you scalp it, which is kind of interesting. But the 30-minute is kind of it's not a time frame I usually look at, so I mean, let's see, is it? Oh, because that was a gap. Okay. You watch the 5 to turn red to get an entry. So if the green candles, or if the 30 minutes green, you want to go long, but you wait for a 5 to be red to go long. Yeah, I trade full time. I'm hesitant to say that because I've been very unsuccessful. But yeah. Like, do you have to make money doing what you do full time? I do it full time as a hobby. All right, Spy's moving up there. There's new high, broke that resistance, so yeah. Probably gonna get to yesterday's highs. Oh yeah, EU closed. This is the direction. We're getting kind of a break free. So this happened the last 2 days when EU closed. SPY could rally after that. So GME, maybe get some of it. Could close my calls. I don't know. I'll just keep whatever. Graduated May with 2 bachelors. Congratulations. Time to sell those college books. There's a slow melt up on SPY. BuzzFeed kind of came down there again. Buzzkill. He's holding up all right. GME's getting a little pull in the market here. Organized crime syndicate. So it's not fully broken here yet, but it looks like it wants to keep going. Question will be to go short here or long. Probably short, but if we get a big break, I just can't imagine today being that bullish. That'd be crazy. Could be. I mean, it's already a big green candle with that big gap down we had. So there's a rejection. Not engulfing, but it is right at that resistance, basically. Pretty big rejection there, actually. No, that's turning Hurricane's 30-minute candle red, but he's got 20 minutes still on it. Carvana got a pop of volume up there. Maybe a short here would be good after all. Little late. What's the dollar doing? Dollar has been rallying today. Oh, just amp up. Weird how strong the dollar is. USO oil's been dumping. I could be pulling down the market. That's a big drop on oil. Now SPY's bouncing. Yep, this is looking bearish on oil. Should have a correlation with the market. Come on, GME, you're doing great. Video rental store. This is the way. Bingo and a video working together, really? Eat. Bingo's one we haven't played with in a long time. They have news of working with NVIDIA or something? I mean, they're working together. Move to Mexico. Look at that bounce, man. I don't know what that was. Something triggered that, but big bounce still. So 30-minute candles back green. Just like that. So there was your buy on that red 5-minute. You were doing hurricanes, TA. Autodesk says decided to eliminate about 250 positions globally. Yeah, oil futures down. Citi CEO Fraser, we're expecting to see a rolling series of country recessions around the world. Well, it depends on how you define recession. GME with a green candle. Might be a good short still. I don't know. It's just a tight little range. Not an easy entry there. This was a pretty good entry, but ended up not doing much. longer time frame, it's really just consolidating. Still kind of bull flagging. And the VWAP's so high, like even if it comes down to VWAP, it's still in that range. I've kind of always just been like an entrepreneur. Not always, I guess. There's been times I've had employers, but even when I did, I was always looking to make money, buying and selling stuff more or less. So say full-time trader. I do this with most of my time. I have an e-commerce business, and then I'm into real estate, um, YouTube, dabble in like a lot of different random stuff to make money. Stock market has consumed me a lot in the last couple years, partially because of GameStop. Uh, but yeah, I guess without an employer, just being self-employed for most of my life, I guess. Stock market just kind of went along with that, and a good investment, or maybe a good investment where you can make money. Similar to how I have with real estate, but uh, yeah. Data killing. Yeah, Jimmy's just stopped. Street pharmaceuticals. That's a good point. That probably won't die off. Real estate is king. Insurance? Oh, those are the kind of things that keep people stuck with an employer. They're scared of the benefits they lose, but that's just to get in your head to trap you into working for someone your whole life. But you've got to be disciplined with your money. Um, to not have an employer, you got to be very disciplined with your time and money. You're most likely going to work harder than you do for an employer, but you have freedom, and there's no ceiling on what you can do, how much you can make, you know, how you spend your time. So Spy bouncing off that support. Still got what, 12 minutes on this 30-minute? Yep. It's red, but it could go green. It's a trap. The FTSE 100 index closed at a record high, 7,901 points. Huh. Can I see that on Weeble? No. Like Nordstrom found a support SPY coming down there. Back to VWAP. I got put to yesterday on GME, a bit premature. I mean, I feel like say will consolidate, but I also think it could be sell off or rally just because of volatility we've had. But it's at such a high level. That's why I see you could see profit taking coming into close at some point. I mean, all the data has been pretty much bad today. Gotta just chill. I don't have to trade it. Don't have to do it. ASPI. I have a position in this. That's why it's on my watch list. I got this at IPO. I sold out enough to make it free, and I've got a few free shares. STS, another one that doubled last month or so. Making another RSI divergence here on the daily. So we made one yesterday, depending on where today closes at. Today closes this low or lower. That's another divergence. More obvious on the 4 hour. 5 bouncing off VWAP pretty big. Gonna go long on that gas, man. Thing's dead. Well done, Jay Scott. Yeah, if you were down a bunch on calls and then they come back green, that's just a gift. That's very unusual. I think I don't remember the exact statistic, but long on options, like what was it? It was like if you're not profitable in the first so much time, you probably are not going to ever be profitable on it. Like in the first 20% of the time frame of the contract or something. So to go red and then really red on it and then come back is crazy, especially if it's like of course shorter dated and even out the money. All right, the paper covered calls, have they moved? They've got 2 weeks on them, so they're going to be slower. But here's the beauty of it. If it does go to 24.5, we bought these for 20 bucks. But you don't have to think about that because your price is probably going to be higher than your price of covered calls. But look, these are up 2.3% today. 101%. Because when we sold these again, Ivy was very low and we sold it when the stock was dead. So giving you basically an example, if you blindly sold covered calls. Basically a farmer trying to plant seed when it's like pouring rain outside or something. Mega cap tech earnings takeaway. Hear it.
Rationalize cost. So yeah, I guess I would agree with Daniel. It is a very tough sort of setup. But investors clearly want to see
Ooh.
these companies cut costs.
Is that
And the
Amazon
ones
drone?
that did a sort of addressed it in a vague way, those are the ones that are heaviest. So Amazon and Google are heaviest, and Apple agreed is pretty surprising given the
Yeah, that's the way to do it, Jay Scott.
and then the
Stuff
guidance
takes
for
patience and
Q1,
discipline,
which
but
looks like a demand-driven miss. So
we're about consistency.
Yeah, and what's amazing too is the resilience of these companies. I mean, basically,
Good talking to you, Mark.
this week,
Have a good one, man. Thanks for coming by. Thanks for your thumbs up. Appreciate it.
Selling off 4% or 7% or whatever they're selling off. In the meantime, all of these names have had a winning week on Wall Street. You talked about the focus on the AI and cloud and the metaverse. What should we expect, Daniel? And what names are you watching closely to be real winners going forward, and why?
Make no mistake, AI is going to be the big story of 2023. When it comes to the metaverse, that's hype right now, but AI is going to be, we're at a pivot point right now. The companies to watch are going to be Microsoft and Google. I expect Microsoft in the coming weeks to make some major announcements to using OpenAI and ChatGPT in its services. It already made some this week with Microsoft Teams Premium, where it's using OpenAI to summarize meetings, which is a really cool technology. But you're going to start to see this stuff really start to be integrated into all these companies' products. Google, came out today, basically say, hey, we got some.
You got to separate your money.
Too, and
that's why you have multiple accounts and
this. Those are the two
big
companies really to watch in the space.
A small amount for trading, and then but larger amounts in boring stuff. That
going to be.
Well, that one's not. That one just has shares, but
had 100
yeah, that does shares or farms data.
It
short puts.
And they're saying it's the most rapid usage of new technology by consumers they've seen in like decades. This is going to really impact.
I'm not sure why didn't I do short puts on these?
New productivity tools and enterprise,
BuzzFeed dropping
as well as
through.
new consumer products. And then you have the hardware chip companies like AMD, Intel, Qualcomm. We're all making what are called NPUs, neural processing units, which is going to be necessary to basically offload a lot of the processing of these tasks. So this stuff is going to be very important. And then it all falls back to Azure, AWS, and cloud computing, because you need all that power for generating all this AI. So this is going to be, I think, a really, really big story. It's the only thing I'm excited about right now. Metaverse is like, whatever. It still may happen someday. I don't really care about it. But AI is going to be really, really important going forward.
Oh, yeah, and I think you're absolutely right. And by the way, Meta, just to note, is up 27% this week. But very important points, Daniel. Final thoughts, Andrew, your favorites and why?
Yeah, I guess if I had to rank them on how they performed on earnings, it would be Meta 1, probably Amazon 2, Google, maybe Apple 3 and Google 4 in my opinion. But in terms of which are the favorites, I mean, if there wasn't an FTC hangover headline today on Amazon, I would say that's the one to keep an eye on.
I can see at least
when
move back down to this
AI, by the way,
bottom of this range.
those comments and
20,
it's all great
50
about
or so.
ChatGPT. I think it's one thing for a private
But it might be the end of it.
company,
Might be the end of this little rally.
To be able to launch
back down to the
like that,
teens.
search with a disclaimer on it. It's something completely different for Google. Google's
Check to
got
see
the
what
tools.
holds.
I'm sure the capabilities are equal that of ChatGPT and maybe even exceed them. But Google's known for their accuracy. That's what they are. And so
Playing
I think
music,
it's challenging to roll that out. But in their call, they outlined plans to do so, and we look for that to almost happen in the next month or two. So.
Okay. Thank you both so much. Daniel Rubino, Windows Central, Andrew Graham, Jackson Square Capital. Thank you both very much. Thanks for being with me.
The music starts playing, you're done. The other guy went too long. That was the problem. Okay, breaking VWAP, maybe even going short here. Seems crazy, but yeah, this is kind of a level. This level, that support, this level, and then we're at VWAP. Yep, taking it. And I didn't get filled. Dang it. Should have done a market. I got a bad fill. For some reason I had on limit. I almost always do market on futures. Call it market manipulation. Maybe this was right. Yeah, I mean, yeah, could be. I mean, it's pretty easy to see this channel we've been trading in. And if it rejects here, probably come back here at the least. So, but yeah, if he's right, then we'll rally to next week. That'd be the next step in it. So he wasn't. I guess he was right about it not breaking out today. He didn't necessarily say that, but he thought not till next week. So yeah, so far he's on track. No breakout today. Oh no, MSGM, no way. Is this thing starting to move? Oh, I want it. I want it. I don't know why these things have been moving. Let me see this real quick. 20,000. Okay, I'd jump in on MSGM. I was kind of waiting. If you saw me looking at it earlier today, I didn't want to hear necessarily, just because it didn't have momentum, but it's got momentum now. We'll see. I'm not going to close this out today because this account doesn't have enough funds to do day trades. I guess I could change it to margin. Yeah, we'll see. It actually kind of looks like a head and shoulders here, but we'll see if it keeps going. It's cooled off enough on some of the time frames. I still don't really know the catalyst for it, but that's okay. So I did get some shares. What about the other ones that were tanked? Oh, MGAM's up also. Bit. SPY's moving back up to VWAP. eBet's not moved yet. SPY. Wow. I still like this short. I just got a bad entry on it. We've got red into the 9 moving average, bearish MACD. Looking at Hurricane. Yeah, we've got an engulfing red candle on the 30-minute even. I'll probably just have to wait through some volatility here first. That gas breaking through the lows.
Mid-month, but that's still an incredibly strong number, almost 3 times what they thought it was going to be. So, for the unemployment rate to go down, labor force participation to go up, wages. How about this? Not only the wages this month were in line, but they revised last month's up significantly.
Right.
So this is strong across the board, and I don't know what the market's going to do today, but a strong dollar, which we're getting, higher yields, which we're getting, it's going to be a tough day for this market to rally.
It's going to be a tough day for it to rally, but then you've got a lot of names that are actually in the green now. Apple rebounded, Netflix, Meta Platforms up again. I mean, the RSI on Meta Platforms is off the out of the realm of possibility, over 80 at this point. Tesla up also, so you're seeing some big names in here, and one of those is Apple, the reversal. This was a mixed quarter.
Yeah, UNG's at all-time lows.
Warren, markets correspondent here on the network, to help us break down these results.
GME with a pretty big bounce off the bottom there.
Week after the report, you know,
Golfing candle
we're seeing
too.
some numbers that we haven't seen probably for 5 or 6 years out of Apple. We're seeing some decreasing revenue. What do you have here for us on Apple post earnings?
Yeah, actually, I'm going to go ahead and take a contrarian stance to what Kevin said. I'm actually surprised we're not rallying more, given the fact that Apple has completely turned around its losses from after the close yesterday, and now up over 3% and hanging on. It's been up over 3% for now, at least the last few hours. So, I mean, I guess don't hold your breath, but all in all, on the back of what was a disappointing report, they did say that their sales fell 5% in the first quarter. This was its first revenue decline since 2019, but they did not provide specific guidance looking forward, but did say they could expect very similar themes now.
Chinese spy balloon moving eastward and is over the center of the United States.
That's
What the heck?
for this company. Apple's profit did fall about 13% to 30
No one shot this
billion
thing
from
down
a year
yet?
ago. Earnings were also down on a year-over-year basis. But fun fact, CEO Tim Cook and then their CFO used some variation of the phrase challenging economy 7 different times on their earnings call, which they said was a huge factor behind, obviously, their downbeat earnings and sales this quarter. Overall, if you look at their total sales of $117 billion, iPhone revenue fell about 8% year over year to $66 billion. This is still its bread and butter,
Yeah,
still
looks
the
nice.
largest component making up their revenue. Next is services, which total just shy of $21 billion. This rose 6% year over year. Wearables at about $13.4 billion was down about 8% year over year. iPad revenue was ironically one of the brightest spots, and I'm like, who is using iPads still? But I guess as I hold one, people still are. That did total around $9.4 billion. This exceeded expectations, rose 30% from a year ago.
Who is
Mac
using
revenue
iPads still?
missed by about $2
She
billion,
holds one.
falling
That's
the
funny.
most sizably, 29% year over year to around $7.7 billion. So bit of a mixed picture there, but all in all, iPhone does still remain the most important aspect to this company, despite the fact that Tim Cook has been trying to move away from that into services for the last several quarters. But also important to keep in mind, I guess, as the bears are quick to point out some of their weakness.
3 school buses be an easy target.
This is not the economy. Apple is
It
not the
floating over middle
economy.
America.
Apple is not, necessarily
I wonder if it'll
indicative
get shot
of all
down.
the trends we'll see across tech. But all in all, I mean, you could say there has been some improvement actually in terms of their electronics. If you strip out the impact from Forex, they're pretty much in line with where they're supposed to be, which is something we haven't necessarily seen from a lot of these other tech players.
Jenny, I'm going to say the saddest thing I can possibly say to you right now, which is iPads were up 30%, and I know you may not understand where it's young people, Jenny, and maybe you're not young like you used to be because students of all ages use iPads now.
Flies way higher in
That's why
commercial
they're
traffic?
So popular.
Okay, that'd be a
Every
tough shot.
school has a student using an iPad, so Jenny, young people are using iPads, Jen.
A blimp and a BB gun.
Now that being said, this is the world.
Really?
The
It's
trading community
flying at like
obviously feels that
50,000 feet?
problems that Apple's facing, the drop in iPhone sales, the drop in overall sales, is temporary, and all that's going to do is push demand out to the March and June quarters. Even though
They're too scared. They don't want to start
in
something.
all reality, Jenny, Apple guided to saying the first quarter is not going to be much better.
Just a little test from
but
China.
People still feel, Jenny,
how-
at least
how
young
scared
people still feel very positive about Apple,
Biden
Jenny.
is.
At least young people, Kevin. I mean, I have no shame in that I might not be on trend with the college kids. This is exactly actually how I felt after Snap reported. I was like, I think I'm finally out of the camp of users that use Snap, but that's okay. But what is interesting to me is exactly what you said, the fact that they do predict a very similar theme into the next quarter, their second quarter due in March. I don't know how that could be
Those are
possible
cracking up.
because we had major Foxconn issues, major China issues in this quarter that they have now since solved. So if we still see the same degree of a
Well, if
revenue
it's that
decline,
high,
to me,
how
that
much
means
higher above
we're
commercial
seeing
traffic?
weakness somewhere else.
The crop dusher won't get up
if
there.
right now the situation is mended in China, we should see an improvement next quarter. If we don't, that means we are seeing further weakness in iPhone sales in the U.S., which is then, I'd say, a bigger issue. So will be interesting, I guess,
planes.
to see when we do get that figure that's next quarter. But all in all, I just have
That
to say
statement was confusing
Apple's
because he spelled
resiliency
planes
is
wrong.
always astounding to me. The fact that it's up 3% on what was a pretty mediocre report is always something that's somewhat amazing.
Yeah.
Yeah, and I think you look at that falling dollar over the last several months, that's
There you
definitely
go.
going to provide a lift
Airplane.
because that was talked about by the CFO, expanding margins
The
to this type
rain
of
in
environment.
Spain
And remember,
stays
the more they
mainly
bring
on the
production
plane.
in-house, like chips and screens, margins will get better there too.
Yep, definitely, and moving some of that production to India and Vietnam also. All right,
Different
thanks to
types of
Vinny
plane.
Horn, markets correspondent here on the network, breaking down the Apple earnings. But now let's bring in Joe Mazzola, Director of Trading and Education at Charles Schwab. Joe, I wanted to get your take here on the jobs report. This was just blowout on every metric, right?
It was a pretty phenomenal report in terms of jobs added, in terms of labor force participation rate. 3.4% in the unemployment rate, taking us back down to 1950s levels. And yet, it's one of those numbers where you see the print and then you look at the futures right away and you expect one thing. And yeah, we got a decent downtick. I think we were down 50 points in the S&P futures when that news came out. And here we are basically.
SPY's going back up.
I don't want to say back to unchanged, but we recovered quite a bit of that. And you look at this market, and it's right now it does seem like the dip buyers are
stupid
in
entry on
control.
here. This would have been the entry.
We're looking at levels that we had talked last week, that 4050 to 4100 level. Well, we broke through that pretty quickly, based upon where the market's at right now and the momentum that it has, it's possible 4300 it could be that next target. Now I say 4300 because I look at that as the August high where we pulled back. But things are getting stretched. They have been stretched for a while, and they continue to be stretched. And that doesn't mean that we can't continue to go up. But, Tom, when I look at the earnings data that's come out, and to me, that's my main focus right now. Earnings data, we've had 52% of the companies, basically half of the S&P 500 companies have reported now. 52% have beat on revenues, 70% have beat on earnings. And those are okay. And I liked Jenny's assessment of the Apple earnings. That they were, they were okay. And that's kind of, the earnings environment we're in right now. Does that earnings environment, though, provide the backdrop for this continued rally? My thought is right now, not so much. But, look, at the same time, markets can continue to build that momentum. I think there's a little bit of the fear of missing out right now that's happening in this market. But, like I said, that could take it up to maybe that 4,300 level.
Yeah, I think maybe some of that short covering, providing some lift for equities so far this, and then you get on the back of that, you don't want that FOMO trade where you don't want to miss any rally that's coming up. But Kevin, if you look at some of the other data, I mean, ISM services was good. I mean, it's almost like it's the robust jobs market, ISM numbers, okay, the PMI a little bit better than expected. That, hey, a soft landing can be navigated in a strong economy. Remember, GDP came out, that first read on Q4, 2.9%. It's not that bad out there.
Wait till the Fed speakers get a hold of this data and have to go out into the world next week. How is James Bullard gonna describe this data the next time he's asked a question?
Well, he's going to walk out on the dais with a hawk on his shoulder
and go 6% interest. Remember I said 5.4? Yeah, it's closer to 6 now on the Fed funds rate. I mean, you're going to get a stream probably starting next week of Fed speakers that are going to come out and talk about what the jobless claims, jolts, payrolls, all that means to the stickiness or the stubbornness of inflation and how their work is really just beginning. That move from where we were in inflation to where we are now, that was probably the easy part, Tom. Here's where it gets problematic.
Yeah, and Joe, if you look at the S&P 500, as far as valuations go, in a declining type of earnings season, that it seems like it's over 18 level at this point, forward looking on EPS. But I mean, that seems really rich right now in, a lot of companies pulling back on guidance a little bit here. And the revenue beat, while it's over 50% on the top line, that's against historicals over the last 5 years, that's low.
It's very low. And what the market's doing is it's avoiding, or at least not listening to the talk that you're hearing from the CEOs, the CFOs, and then, of course, as Kevin was mentioning, the board governors as well, too. It's basically just kind of bypassing all that talk and saying, we're looking forward. Now, I think one of the keys, guys, that we've talked a little bit about is this idea of a rolling recession and whether or not that's actually occurring. What a rolling recession could be, and that's what we could be in this market right now, is you're seeing pockets of weakness. We're going to talk about home builders in a little bit, but it's very possible that we've already gone through some recessions in some of these different manufacturers. We saw really depressed manufacturing data back at the end of the year in the fall. We saw basically home builders potentially bottom in October and November in terms of what they were looking at for their pending and existing home sales data. And maybe, just maybe, the market's looking at where we're at right now and saying, there's the real potential for within the next 6 to 9 months for a lot of this to correct itself. But what a rolling recession could mean is that we're moving from some of the manufacturing sector recession data into maybe now we're starting to see that maybe make its way into tech, because as we're hearing, from some of the tech leaders, they're not necessarily forecasting a bright future in the next few months. Now, is that because they're trying to lowball
maybe
earnings
MSGM?
coming into the
just
next
TA.
segment? Who knows? That's very possible.
Did it sell back off?
But I think you have to look at this as not maybe just a recession for the overall economy, but maybe
it's doing all right, actually. It's consolidating
within manufacturing.
I'm missing had a crazy rip, of course,
tech,
and I was waiting for an entry on it.
And out of these different times within the market right now.
And today it just started to turn on, so
out of the earnings, we just talked about Apple.
Maybe just a pump and dump right now. I'm not sure.
It's reversed from lows, but Google Alphabet's down less than 1% today. Amazon's got some other things. They've got some regulatory issues, but they're down. What stuck out to you out of those three big reports? Because it really hasn't negatively affected the market like I thought it would.
Yeah, I mean, we saw some revenue beats.
Spy up through that
Google,
resistance. Dang.
Came
Should
out
have been patient. That was
basically
such a
they were
stupid
up
entry.
1%, so that wasn't much there. We saw a little bit of revenue rising in Amazon, and we saw Apple revenue down. So, I mean, across the board, once again, nothing that really was amazing in terms of
that was volatile.
The earnings themselves. But I think the market's looking at this and saying, wow, it's not as bad as it could have been. And we're already starting to see, and I think this is really important, you're starting to see in the tech sector cost control. That was a big reason why you saw Meta move as much as it did, what, 25 to 30% in the last couple of days, was this idea that, hey, we're pulling in the reins a little bit on CapEx, we're pulling in the reins a little bit on our costs to make sure that we're a little bit more fiscally disciplined. I think that's what the analysts and what the market wants to hear from some of these tech companies. You've already seen the layoffs, and now it's a matter of, did they trim the fat? Or are they going to have to start cutting so much that it hurts revenue going forward? At this point, I think the market's looking at it and saying it was a fat trim. There's the possibility that they didn't trim so much that it's going to hurt revenue going forward. I'm a little bit on the fence on that one, but I guess time will tell.
Yeah, definitely. And the Apple CFO actually stated that also. They're starting to look at efficiencies, and Meta platforms, boy, up nearly 28, I think, % over the last two sessions. So, just stick that in there, take out Metaverse, and look what happens to your stock. All right, guys, let's take a quick let's take a quick break here. But we're going to talk about one of the sectors that's really done well this year, and that's the home builders. We're going to focus on Lennar, which is just.
Pentagon says U.S. always open to maintaining open line of communication with China. No answer. Pentagon says it will not discuss exact position of China balloon. People can look up in the sky. What? It's like that movie. Look up. And something's wrong here, because if it's the size of a couple school buses, but it's at 50,000 feet, I don't think you can see that from land. Unless you're like a very, very high mountain. Like Everest. So either it's not that high, not that size. Something. EU governments agree on Russian oil products price cap of $100 a barrel. Pentagon says Chinese spy balloon will probably be over the United States for a few days. Well, we're not shy about how China owns us now. Just let them cruise around and check us out. See how all their little peasants are doing. Jumped in it with me. Oh, jeez. Be careful. This looks like a Head and Shoulders. That's what I saw after I opened it up. But yeah, have an exit plan at least or something. Look at it. Let me see what's going on here. So yeah, it is kind of at the 61% retracement. Same sort of spot that BuzzFeed. Yeah. So bouncing on that is a good sign. Wow, AI just continuing to rip. Whew. Mullen holding up well. AMC's really outpaced. Probably got, yeah, a lot of making up to do.
Net income margin, this is unadjusted, was about 14% on gross margin of 21%. So that really suggests that prices, of course, in the last year or so were significantly higher than the input costs. But on a forward basis, if they even cut the net income margin by half, one would say that on a forward multiple of 12, it's trading at basically less than 2 times EBITDA, and that's still considered fairly valued despite a nearly 50% reduction in earnings per share estimates.
Yeah, and this is about affordability, in my opinion, George. So, you know, if we see some consolidation here in yields at this point, that's going to help because demand seems to be robust, right?
Yes. Very much so. Look, there's a couple things going on. If you just look at mortgage rates, I mean, from 7 to 6%, I mean, that's obviously still very high. But new household formation is still growing as the labor market continues to grow. And the last thing I'll mention here is if you just consider new home builders like Lennar and KB, Pulte, they're effectively price setters. They're really setting the market price. And ideally speaking, new homes are where demand is still strong because existing home sales have been very, very lackluster as there's a lot of reluctance for those who have locked in cheaper mortgages over the last few years to sell and even move up or move down if that's the case. Yeah. Because again, they're sort of trapped in their homes. So I think the new home market is still robust.
Moving
and
back
prices
up.
Have held relatively firm, and you have to also
timed
consider
the bottom nicely on here.
You know,
went the wrong
homes
way.
themselves provide consumers and home residents an inflation hedge as well.
Yeah, definitely. Yeah, I'm pretty surprised. We did see that mortgage rate, 30-year mortgage rate, get below 6% for the first time in about nearly 5 months yesterday, but reversing a little bit higher today. All right, thanks to George Tillis, Senior Markets Correspondent here on the network, breaking down Lennar for us. Joe, I'm going to bring you back in here. You know, I talked about affordability at this point as far as housing goes because demand's still out there, but is this one of those things where, hey, if mortgage rates are double from where they were a year ago, why would you move, right? If prices haven't come down.
I think that's the question to be asked, Tom. But we talked before the break a little bit about this idea that, you know, some of the data in housing might be bottoming. And just to give me an example, pending and existing home sales. If you look at pending home sales in December versus November, they were up 2.53% in December versus down 2.6% in November. Existing home sales, they were down 1.47% in December versus down 7.9% in November. So you're starting to see kind of that bottoming form. And like we said, the markets are always forward-looking, right? So what you're seeing in the housing sector with these massive moves that we've seen in D.R. Horton and Lennar and the other big names within that sector is that they're kind of looking forward to say, okay, the second half of the year, what could that look like if we continue to see mortgage rates go down, if we start to see a little bit more affordability, if we see the Fed, you know, at least pause or find a terminal rate that, you know, that that we know for sure what will be, and they kind of stop moving the rates up, then at least we'll have a little bit more clarity in terms of that affordability index. So I think the markets are looking ahead to see kind of what that looks like on the back end of the year. That being said, markets have looked ahead, and they've looked way ahead, right? I mean, the moves that we've seen on some of these names are pretty substantial. I know that George was talking about the year-to-date move, but take a look at the RSI. You were talking about that in Meta. Well, the RSI in Lennar is back down to around 71, so it's kind of just above that slightly overbought level. It was 79 before, and for me, when I look at RSI, the key is it's not the move up above, it's the move down back below. If it drops below that 70 level, then that tends to show that maybe there's some divergence between what's happening with the stock itself and then whether or not that relative strength is holding up. So what I'm looking to do in this trade is it's not necessarily what you would consider a strongly bearish trade. What it is it's a trade that kind of looks at a potential crescendo in the stock for a short term, takes advantage of that stock potentially rolling over, and looks for a little bit of a downward move, not too big. This is a put butterfly, but it's an unbalanced put butterfly, or a broken wing, if you will. So I'm buying the 106 puts, selling the 100 puts, and then buying the 97 puts and the Feb 23 expiration. Depending upon where the market's at right now, you can probably do that for somewhere between $1.30 and $1.40 within that range. And what that does is that allows you to take advantage of that move back down from where we've seen, pushing back down towards 100 should we get there. If you're paying $1.40 and at the 106 level being your first long strike, that means your break even takes you down to about 140.60, which at this point, we're not that far away from it. It's going to take about another $1.50 move or something like that to get down there, $1.70 move. If you get down there, you have about 2 weeks for this this trade to work out. If that happens, then as it rolls over, you'll start to kind of move from those short deltas down to that 100 level. Really low vol environment right now, and if you get back down to that 100 level, that's where this trade expands to its max gain.
Right. Yeah, let's break this down. Buying one of the February monthlies, the 106 strike puts, selling two of the 100 strike puts, buying one of the 97 puts, paying $1.40 debit for that. There's your risk, $140 on this spread. You break even 104.60 to the downside. But Kev, this is directional, but you're lowering your cost by doing an unbalanced butterfly here. And Joe mentioned you're buying this in a low volatility environment. We're at 52-week lows in Lennar in overbought levels, so this is a 2-week trade. Your thoughts?
Short 21 deltas. Obviously, you're long the 106 100 put vertical. That's where the peak is, 100. Selling the 197, so long 6 points, short 3 points. That's why even if you get a catastrophic move through the strikes, you're insulated from any losses on the downside because of that. If it goes, one can go to $6, one can go to $3. Trades. You spend $1.40. So worst case scenario, you still make over $1.50 on this spread.
I'm melting
Joe,
up
when
here.
you look at that, you start looking at technicals, overbought levels. You see there, even below that 97 strike.
If it breaks here, I'm going to cut my losses.
Because it's a $3 wide short vertical versus the $6 bearish vertical, you're still going to make $160 below that level. But when you look at the technicals here, is that what you kind of focus in on when you see parabolic runs like this in specific names?
Yeah, no, exactly. Because I think, as George mentioned earlier, I don't look at the fundamentals as being extremely valued to the upside. I look at those as probably in line. Now, I think, the key is, as he mentioned, this idea of cutting forward earnings expectations basically by half. And what does that do to valuations? Well, then it takes your current PE of around 6 and it takes it up to around 11 if you do that. So at that point, yeah, it does look potentially a little bit richly valued. But I'm looking more at this, as you mentioned, Tom, as more of a technical trade. I look at the peak that we hit around 110. Today's action suggests that could potentially be rolling over, and I'd feel more comfortable about this if we start to get back below that 70 level in the RSI.
Yeah, definitely, and it's far above its 50, 100, and 200-day moving averages. So expanded pretty rapidly so far this year, hitting over 50
GME just on a
highs just
perfectly
yesterday. All right, great look at
downtrend
that
today.
example trade here, kind of fading the recent move with the expectation that it's going to grind lower. All right, thanks to Joe Mazzola. He's Director of Trading and Education at Charles Schwab for joining us. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for discussion.
BBY's chart is looking more bullish. I wish it didn't have concern it was going to go bankrupt. Is that juicy option premium? Sorting through some 3-strike. Look at that. Let's look at the ROI on that. It's $300 in capital. That's 17%. I think it's 17% return on your money in 1 week. I did the math right. $300 to short a three-strike put. Premium receive is $58. Be 300 times 0.058. 17.4%. That is neat. In a week. Pentagon says Chinese balloon will probably be over the United States for a few days, and it is reviewing options over the balloon. Republicans urge U.S. government to shoot down Chinese balloon. Pentagon says Chinese spy balloon has a large payload? Surveillance component underneath it? What the heck? Dude, I gotta look at this thing. Yeah, it's got like a satellite on it. It's like solar panels and a satellite. How do they know it's from China? Yeah, it's a payload of surveillance. You're scared of the repercussions. Probably dropping more COVID. You guys look like you're out of COVID. Let me go out and drop you a little fresh dose here of COVID. Retail's left in the dark. All we have is hope. Yep. It is the risk you take. An audio leaked of BBY office talking about restructuring, etc. Restructuring is another word for bankruptcy. Again, that probably could be the best thing for them.
department store experience. Some of that appears to be waning. We're not seeing any
Oh, I'm
signs
talking
of a
Nordstrom.
massive shift yet, or a turnaround, at least in terms of the company's execution. So we'll definitely be watching to see if any changes are implemented and if this does cause a shift in the consumer behavior. But so far, no real signs of improvement on our end.
Megan, this company posted lackluster holiday sales. They cut their full year guidance. This is a company that trades at a fraction of where it used to trade and can't seem to get any real momentum with the full price merchandise, with Nordstrom Rack, which everything they do, the online. But here's the thing, Megan, as much as it makes people uncomfortable, right? There's a Nordstrom that's CEO of the company. There's a Nordstrom that's president of the company. An activist investor, something to get this company in a 180 is probably needed right now, and I'm sure that's why stockholders are applauding this move, because this company needs to be shaken up, doesn't it, Megan?
No, 100%.
No, it's a
Nordstrom
department store.
used to be,
It's a store.
whenever we talked about companies with the highest levels of happiness in our universe and consumer loyalty, Nordstrom was a name that we used to bring to the table. Its consumer happiness levels were really high, really exceeding peers. And it's interesting because we started to see a shift. Those Nordstrom happiness levels have dropped by about 2 points from their, peak heyday highs. It's about 70% positive, which may not sound significant, but Dillard's,
That's what I thought.
Here now is on equal playing field. Those consumer happiness levels are exactly the same.
I thought
And
Ryan
so
Cohen should have bought
it's
Dillard's.
kind of losing that edge.
That one
it
actually
once
had like a
It's
squeeze.
losing the things that it was once known for, and I think that's an
It's just
area
way
where
more
potentially
expensive,
new
probably.
leadership could help kind of redirect the
Yeah,
ship.
this thing went from 19
to,
bucks to 400
rejuvenate
in
that
like a
brand,
year.
because that's probably the brightest spot and the most positive thing that Nordstrom has going for it is that legacy brand, what people remember the experience of shopping with Nordstrom like. And whenever you look at qualitative mentions of tweets, we used to see mentions of people who would just applaud Nordstrom's customer service, talk about what a wonderful experience it was to shop in stores. And COVID kind of shifted everything. It killed that edge that Nordstrom used to have from a person-to-person basis. And we're seeing that Nordstrom is really lagging as it attempts to shift to that e-commerce and carry that superior customer service through, at least on the minds of consumers. One metric that we look at on the digital side of things is how much time consumers spend on Nordstrom's site. So, the more time consumers are spending shopping around on Nordstrom.com, the more likely they are to spend money, right? They're shopping around for more. And we've seen that average duration continue to slip. It's down by about 7% year over year. So I think that there's definitely room and places for improvement. And it's something that Nordstrom has proven that it's done before. It's just, can it turn that ship around and get back to what it's known for?
So Megan, when it seems like the resilience of the upper end consumer right now is still doing well. You mentioned that happiness levels have come down here. Is this due to does your data reflect anything about inflationary pressures? Because we see a lot of consumers trading down in this type of environment. Is that one of the things, if inflation continues to
it was on its way to fill that gap,
provide
and then
better
RC had to go
data
and mess it all up.
for Nordstrom moving forward?
Yeah, there are a couple of metrics that we're watching, especially for Nordstrom's Nordstrom Rack brand.
Yeah, you look for a buy after that gap fill.
One of those is deal
$11.
discovery. Even Nordstrom called out that a lot of consumers, they had to mark down a lot of inventory, and consumers were more intentional with their buying. They were hunting around for deals in a lower price point. Well, so far, we haven't seen any resolution in those deal discovery mentions. Actually, they're near all-time highs right now. And we also have signs, just when we listen for consumers who are talking about, depleting their savings account and maxing out credit cards, those also remain really high right now. So I think that those are some headwinds that Nordstrom has. But certainly, as those headwinds kind of ease, and as hopefully, inflation comes down and consumers kind of build up their, economic position again, that this will shift for Nordstrom. We just aren't seeing signs that it's shifting yet. So we think that, there could still be some significant hurdles that the company has to overcome before things really turn around.
Yeah, they don't have earnings until early March here, Megan. If you guys did have an earnings score on this, what would it be?
What's up?
So if earnings, like you said, they're in March. But right now, our score is a -33. So that's bearish for Nordstrom. We'll see how things go.
Boring
We'll
last
see
2
if that
hours.
continues through the next month.
It means flushing.
So far, it looks like it's likely that it'll still be a bearish outlook unless something drastically changes.
All right. Bearish outlook going against the activist investor. I like it. All right, Megan, have a great weekend.
Nordstrom has Nordstrom Rack, which is like their discount. I've shopped there before.
Research at Likefolio,
it's pretty
breaking
good.
down the Nordstrom data. Kevin,
it's not like a Ross or
one
anything
thing
like
to
that,
say
but
about this activist investor, and it's Ryan
brands,
Cohen. He's from the ex-founder of Chewy.
Yep. He's created a great company.
He did, but he's also created a couple of spikes like this prior to his involvement in GameStop, Bed Bath & Beyond. Ask those shareholders how that helped them, because he got nothing done becoming an active investor, taking a stake in those companies. Now he's doing it to Nordstrom, where you've got some founding family members on the board that are going to be like, what is this guy doing?
Well, like I said, the president, the CEO is a Nordstrom, the president is a Nordstrom. I think they're, and a lot of what his complaint is about is compensation, and how the overall executives of the company are compensated. And so he has his sights on one board member that was from Bed Bath & Beyond. He was the old CEO. He was a former Target exec. He worked for Nordstrom for 2009 to 2016. So he's basically calling out what he thinks is some bad behavior. I don't know. We have no idea what the final outcome is, but the stock is up today, and the stock has been depressed for a long time. And I think a fresh look at this, a new set of eyes, is probably warranted. The price of the stock over the last period is probably saying that they need a new set of eyes. So from a trading perspective, Nordstrom is a high-quality company struggling at the present moment. So, maybe this reignites some interest in the stock and the business model.
Yeah, I mean, this stock was trading $40 3 years ago. Yep. Getting a nice spike here today, 21%. How do you want to look at this from an example trade?
So I got two trades, Tom. One very simple, one a little more complex. One is basically the polar opposite of what Joe did. This is the unbalanced butterfly on the
Yeah, it's interesting. I didn't realize the people on the board were actually Nordstrom. That's crazy. Sheriff of Nottingham. GME. So negative. The beta is just from historical. It's not future. It doesn't pick the future. It's just from historical data. And depending on what time frame you get your beta from, because you'll get different beta scores, positive, negative, how much. You have to look at what it was from. If it's I can't remember the different time frames, but all sorts of different time frames. And GME had big negative beta just from this move in January, where it was literally sucking in the entire stock market, sucking all liquidity into it, and causing the market to come down while this was going up. So after that, it had really strong negative beta. And then maybe a couple of these other pinches when it got volatile, it did. But it has positive beta for the most part. So it's only changing based on historical price and how far back do you date it. But I think 6 months, if you're looking like 6 months trailing beta history or whatever, you'd say it's positive. Pretty highly positive. I don't know what point specifically, but yeah, if it starts going to negative beta where we're actually inversing heavy, yeah, that's like the squeeze again.
Session when it was up 30%. So this is a bullish type of example with the apex.
A little bit, yeah. I mean, they're saying he hasn't done much with
35, but
GME or BBBY.
Above that 37.5 strike call.
Probably more BBBY than anything.
But you do lose a little bit of that profitability. You profited just over $500.
He basically just bought it and then
on that. But you wanted to move higher.
They didn't do what he wanted, so.
And then let's look at the cover call here strategy.
And shareholders are left with.
Shares of stock you buy.
Now maybe went bankrupt that it's lost tons of value since he bought in.
You're paying a debit of basically 25.25 on this one. So that's going to be your risk. You've got risk down to zero because you own the shares. You're looking to get paid to wait on this type of strategy where you're collecting some yield from your February 10th
wicking candles on the top
call. But then also, if the dividend gets paid out, you're collecting
that
flip
back bullish,
3% dividend yield on that one. break even on that is what you pay, about $25.20 on this.
Hurricane's
is your
gonna
break
rally
even.
into
But as
market.
I mentioned,
I'm hoping
you've got a
it'll
lot more
sell
risk, as
off.
Kevin mentioned, about $2,520 on the covered call if the stock were to somehow go down to zero.
That's not a bad one. A buy right on
of the
Nordstrom
cost,
because the
but,
premiums are probably
right,
jacked.
You need movement.
Yeah.
You need movement above that 26 level for this to break even.
Yeah.
Actually,
But
27.
I mean, it's already
And
so
it's,
high.
you know, when you look at covered calls, it's more capital intensive,
Yep.
but it's also a more neutral strategy where if the stock just hangs out here, you'll have that ability to potentially roll that short option to another strike, to another weekly cycle.
16,000% on
Every
these.
time you do that, you lower the break even, you lower the net entry point of
Crazy.
that.
All right,
that
yeah,
stock.
SPY
Yeah,
is
definitely potentials for
green
rolls on
candling
that
its
market's
way
open
up.
liquidity provided. All right, great stuff. Great look at two different ways to play this Nordstrom on this activist investor news. All right, let's take a quick break.
Gas with a
when we
bounce.
come back, we're going to take a look at Starbucks
Not much, but a little bounce.
earnings
GME
report.
moving
that we
up a
saw
little
last
bit
night
with
after the
SPY,
close.
would appear. Stop. Dead. The music gets me in trouble. AI just continuing to grind. MSGM holding up well above VWAP. Phase is holding well also. Oh, we got Getty. Getty hasn't been one I've looked at in a while. This one's looking nice. Still, Phase is holding up. Volume's a lot weaker today on Phase, isn't it? Ah, closed out a laser too soon. Laser. Yeah, that done that before where the market's like selling off and I just close out for profits on stuff real quick. I don't want to lose them. But this had more move in it. Well, profit's good. The daily cover calls on GME today, they're at 60%. The last bit is going to take a while to really brush the IV on it, right? Because they're so cheap already. So it's been sitting around here at 8 cents or so for quite a while. So you could close it out here, or just keep waiting because it'll probably be out of the money at the end of the day. All right, SPY's coming down now.
To we had, in addition to that, earnings as well, which sort of fueled the fire to the upside as investors seem to focus on the positive, right? Buybacks in some instances versus some of the actual numbers and bottom lines and guidance. And then in addition to that, the Fed yesterday really kind of solidifying that move up here. So we've been talking a lot about the key levels to watch to the upside.
I think it's good to have
4,100,
multiple
right around that December
brokerages
high was a key
to
level
separate
up
what
and
you're
through there
doing.
now. The next big hurdle for the bulls, ultimately, you have that August high up around 43.
Definitely user friendly.
Yeah, definitely a nice rebound here. It seems like the momentum for risk assets, despite that higher dollar and yields.
I know the dollar did rally.
What's your take here?
With
because,
the market,
you
which
know,
is strange.
if you look at just the jobs data, it seems like the bond
Now it's
market's
coming
got
down
this
with the market?
wrong
What the
because
heck?
yields have been sliding. We're seeing that
Are they moving
reversal today,
correlation-
but it's
correlated?
having little negative impact on stocks.
Yeah, and you've watched the dollar kind of, try and figure all of that out as well, because it does seem like the bond market's telling us a little bit of a different story compared to what we heard from Fed Chair
Gas
Jerome
getting a
Powell,
bounce
and
up the
I think that's
VWAP.
why, we're seeing
like
kind
all-time
of
lows.
wide intraday swings, some volatility. Speaking of wide intraday swings, I mean, I'm sure you saw the dollar this week down to 168, and then today back up to 102.75, Tom. And with the dollar coming off those recent lows, I mean, the ripple effect's been widespread. I think it is, again, kind of tied to what we've seen in rates. The TNX back down and convincingly below that 3.5% level, what we've seen in terms of Treasury futures. But with this dollar rally here today, it's come back. Look at this, up about 1%. I saw gold go from 1975 yesterday to 1875 today. That's a huge move to the downside in gold, $100. I mean, you don't see that every day. And then also with the dollar ripping higher, we've got crude oil, interestingly enough, coming off from 78 down to 74. So it's important to understand, and Kevin always talks about, focusing on the dollar in terms of some of the other products and the impact that it has on them. We're definitely seeing that today and this week.
Yeah, we'll see if this rebound holds, I think, for equity markets, because the dollar and rising yields are telling you that maybe topping out here a little bit. All right,
That's the risk
thanks
with
to Ben
those
Lichtenstein, host
volatile
of the
ones.
show here on the network. breaking
MSGM
down
halted
markets
to
and
the
some of
downside.
asset classes. But Kev, let's get into a discussion about Starbucks. Sometimes we
I was
like
just
to do
looking
this.
at
We
my
didn't hit it before earnings.
trades open up
So
today. I'm
post
like,
earnings,
what?
we're
That was
seeing
down that much?
A little bit of a sell-off. They missed on EPS. They missed slightly on revenue. But same-store sales were up 5%. Average ticket price up, but the transactions were down again and still considered weakness in China.
By
But that
bouncing on
should
that
start
support.
to rebound, right?
Whether they want to admit it or not, this is a company dependent on China.
Yeah.
For a lot of it. Why? Here's the numbers. China comp stores down 29%. U.S. up 10%. International, excluding China, up 25%, Tom. So this is actually a company that's struggling, but it's struggling only in one place. And if they get China figured out, however, we've stated many times on this show, you're in business with China. And so you are at their mercy on some things. And closings, COVID, has hurt Starbucks' ability. Now, they've got a lot of good things going on in this company. How about this? How about this little stat? Remember, first quarter of the year is when a lot of gift cards get activated and turned in.
Right.
They sold more gift cards than the next 4 companies, the leaders combined. That's how many gift cards Starbucks sells. And during the fourth quarter, a lot of those get activated and turned in. Right. Remember, Christmas, right?
Right.
You get gift cards. So their gift card game is strong.
Yeah.
Strong in the gift
Their
card
mobile
game.
app continues to expand and grow. Their rewards program on their app continues to expand.
One last thing. 8 out of their top 10 days ever in the company during 2022.
Oh, really? Okay. Now, see, that was my whole thought process here, because we knew that China was going to be weak, but we expected it to rebound. But that's probably going to come down the line as they continue to open up. Remember, China just opened up a month ago, month and a half ago. So those numbers may start to improve. So I looked at a strategy to take advantage of the vol crush that we've seen in the stock. Even though the stock's lower today, implied volatility has fallen pretty rapidly in this name. It's back near 105 level, Kev. So I looked at a strategy that if you think this stock's going to rebound, but maybe you don't think it's going to explode, right? But you think it might go higher, maybe up towards 112, 113, 115 even. So I went out to the April cycle, so basically over 2 months until expiration, and just bought an at-the-money call, the 105 strike call, and then against it to offset some costs because there's still some option premium and out-of-the-money options that have over 2 months till expiration. Sell the 115 strike call, creating a bullish $10 wide call vertical to the
birds
upside.
got partially
Paying
filled.
roughly a debit of about $360, and Kevin's got the risk profile up here. So if you're paying roughly $360 debit, there's your risk, $360. That can expand to $10 if it goes
34
up
fills.
above 115 by expiration. But you break even about 108.60 on this one, Kev. Your thoughts on it's a directional play. You know what your risk is going in, but you definitely need it to move higher.
You've basically bought an at-the-money call and sold an out-of-the-money call about $10 higher. That gives you You know, that's playing for the next move, the recovery, when news getting better in this name. You're paying a little theta, but you got 33 deltas, cost you only $3.60 for basically a third of 100 shares of stock, right? 100 shares of stock in Starbucks would cost you a lot more than that. So this is an efficient way to buy 33 deltas. If you buy 3 of these, it's basically a little over $1,000 and you've got 100 deltas in Starbucks. So it's using options to get the same exposure that you would if you had 100 shares of stock.
Yeah, and I think we always talk about staying risk defined, right? Lowering your cost input on a bullish play. This does.
I know it's halted.
15 call against
I know,
Jamal,
I know.
105 call. But
Halted the downside,
on a
John.
percentage basis,
We'll see where it opens up. I mean, it's going to be volatile. This thing
remember,
has
this stock traded nearly
made a
111
crazy move
just yesterday ahead of this earnings report. So if you think this is going to go higher, directional call verticals at a lower cost entry point because implied volatility is down, maybe one way to look at Starbucks if you think it's going to grind higher. All right, Kev, that's going to do it for you and I today here on Fast Market. Stick around, though, right here on the TD Ameritrade Network. Next Gen Investing is coming up.
Yeah, I got some of my birds contracts filled today. Or 170. 170 into the new later strike birds tracks. Yeah, I will. Buy coming down to VWAP now. SPY breaking VWAP. Waiting to see when MSGM gets halted or unhalted. GME just low grind down. Oh, I got it. I got a fill. There's some liquidity on this birds chain. Oh, pretty big drop there on SPY. Oh, is there news? That's a pretty big move. Let me see. I don't see any news. I feel like this balloon though could escalate. Wow, it's a pretty big sell. Start looking at levels to exit. Maybe here, maybe pre-market. I'm not sure what the news is on this. It's a pretty big drop though. the thing with with this balloon and stuff, that could escalate over the weekend, so I'm wondering if I want to hold the future over the weekend. That was a fast dump. Yeah, I'm getting filled on these birds calls. Don't see any news or anything. Something's going on. It's something with that balloon. Might not be anything. Just algos and profit taking. Oil's coming down more. Dollar hasn't really moved up yet, but it has rallied today. Hmm. I closed out of my short for now. I don't know what this was on or news. I feel like it could keep coming down, but the market just keeps bouncing, bouncing, bouncing. Seems like this was on news, and if it was, it's overreaction, maybe a bounce. Oh, looks like it's gonna keep going. I don't know what this was on. Is MTC? Primal? Hmm. This is like what happened yesterday almost. Except yesterday was way later. And a lot bigger.
Deal of upside from where we're currently trading. The analyst said that ongoing supply chain execution challenges will cap any upside to deliveries in the near term and will impact Boeing's overall
yeah, I closed
sentiment.
out and then I actually opened it back up.
Do not see downside
but I might put a stop on this thing.
Delivery guidance specifically
I feel like it should come a little bit lower at least before it
say
bounces.
That inconsistent production levels
although that is kind of a floor there.
The full credit
so
for
far it looks like consolidating here.
Free cash flow upside for 2025 and 2026. More of a long-term view here from RBC on Boeing today. A name that has rallied back
where do you
about
see SPY hitting
85%
before downturn?
Year-to-date lows.
That's the thing. It's any day now. I think it could
really strong, actually.
Maybe yesterday was the top.
January, but we have since seen some of that sentiment
if that breaks though, probably not a top until at least this next resistance up here, 428.
Let's say the early parts of October.
That's the nice thing about longer dated options. Is you have all
the
time.
You could be confused or
and then
tricked into
combine that in
this
with like scaling in. It's pretty powerful. So if you're going to get a few of them, you can get one, one today, and then one next week, and then one the week after, and get a nice long spread on your entry. So you get a nice average, and then you could stop or go quicker depending on what the price does. Like if SPY starts going back up next week, you could wait, and then if it keeps going and then it breaks this resistance, then just wait, and then get another one up here at this price target. If you're trying to time the top, or you can wait till the momentum starts turning down and then get them. Wait for a MACD crossover, red under the 9, that sort of thing. It's a pretty big move down for how mellow today has actually been. I don't see any news. I don't know. Nothing in particular, I guess. Up 10, down 10, up 5, down 5. Crack the code. Bought some Nordstrom 27 calls. Wow. April? That's not a leap. I guess you did say long dated. April's not really long dated at all, though. Our perception of long dated options has been skewed by retail and gambling with options and doing short dated. A month could have been considered short dated a couple years ago, probably. So you're talking to April, that's just a few months. Here's a line I have. I don't know know what that's even. Oh, that's pre-market low. So I'll put a stop limit on my. Not sure if it will. If it breaks this, I think we could come down a lot more. It's kind of starting to break here a little bit. Yeah, it's still going. Wow. There's kind of this level back here. I guess that's just a wick. Or still coming down. Wow. Time is your friend with options if you're long on them. Especially if you're new to options or not too sure what to get. Just get lots of time and close to the money. Your chances of success are much higher. Did you get dailies or what? What's your expiration, Hurricane?
Like their operating cash flow totaled about 1.2 billion this quarter. Adjusted free cash flow came in around 2.4 billion. They did also declare a first quarter dividend of about 15 cents per share plus a supplemental dividend of 65 cents per share. But the street has some reservations
they
on
wrecked
this report. Looking
MSGM.
ahead, they actually gave guidance that was pretty in line to what they guided for a year ago.
That's the risk with
and what I could see from
these
the
volatile
analyst community
stocks.
today is that they don't believe actually in
Gapped
Ford's
it down
guidance,
on that
which is never
halt.
something you want. Deutsche Bank actually downgraded the stock to sell from hold, saying this was a large miss and they are no longer sure that Ford can hit their 2023 guidance despite the numbers the company promised going forward. A very different tone from what we saw from its
Nordstrom. What
competitor
date did you
GM
get on
earlier
this?
this week when investors applauded its most recent quarter.
Yeah, I think that stark contrast is really why you're seeing some of the heavy selling that we are today in Ford, but pretty harsh criticism, obviously, from the analysts in response to this.
Don't want to see MSGM
maybe,
break this level, actually.
You know, kind of
Might cut
rightly
losses on that if
placed.
it
I mean,
does.
we've heard about supply chain issues for
Pretty important
several
support.
years now, but we've also heard about them improving. So Ford is no longer
Can't cut losses on
being
this, I
able to
forgot.
hide
I'm
amongst
riding.
its
Ride or
peers
die,
that
baby.
have also struggled with some of these same problems, but have started to improve those situations. So the fact that Ford is still blaming supply chain issues, not showing meaningful improvement there, investors are just losing their patience here with this, and I'm excited to talk this one. Obviously, it's not as expensive as a
no reason to
per
look
share
at that.
price
A minute.
name as others that we talk about, particularly some of the tech names, but there's still technicals to be assessed as well, so looking forward to talking this one with Rick.
Yeah, and two post-earnings look, both names lower, Starbucks and Ford, in reaction to their quarterly updates. We will be looking at the technicals as well as some example trades coming up next. Stick around next.
Yeah,
time.
I mean, that was a crazy. That was a crazy move they did. That's the thing with the halts, like for them to open it back up way down there is jacked up. Yeah, I'm gonna stay in it today. I don't know though. Holding the support would be a good sign. Yeah, just halted in a gap. Funny, I thought a sell-off was coming in the market, but I didn't let it affect my other plays. Maybe not enough. I did that yesterday. I pulled out of my laser play because the market was starting to dump. And that was maybe too early. As we get higher and higher and more peaky, you're gonna start to get these like little flash crash things. These intraday weird sell-offs. Okay, I'm closing out of that ES. Another couple $100. Not bad. Happy with it. I got back in when I probably shouldn't have anyways. I don't want to fight the bulls. Bulls strong. Bulls like ox. Apple's holding up. Yeah, pretty much. This is, I mean, it's kind of a support. Just kind of a weird one with these wicks. My entry here was awful, but still captured a move, which sometimes it benefits to hold through. I had basically a really wide stop where I could let it come all the way up. I told myself I'd close it if it broke this, which would have been a hard loss to swallow, but it didn't, and so it was worth it to hold it because then captured this move from here to here. So the TA was more or less right. I had a poor entry on it. Even if you just entered on this one, you probably wouldn't have even gotten stopped out unless you were down here. Now it looks like it's just consolidating down here. BBBY, yeah, that's true. Yeah, I don't know. Maybe that was Tesla or some mega cap, something pulled down. Tesla came down with it. I don't know what it was though. Maybe it was the banks. Oil's dropping. The dollar's rallying, so there's other factors that are pulling it around. Oh, I just muted for the loudest sneeze. Sounded like an American Ninja Warrior. These covered calls on GME will show you we've come down all that way. They've only come down 1 penny. Well, I guess 2 pennies. From 7, like 5. They were like 8. I haven't even come down much. That last bit to squeeze out it slows down a lot.
Are the main points of support and resistance in the short term. Beyond that, we've got our orange 63-day EMA near 101 to the downside, and to the upside, we've got the old highs near 110. So some pretty clear lines in the sand to be monitoring here.
I like that you highlighted the 106 level as a level to the upside. I was actually reading a bunch of analyst price targets on this name. I mean, 91, 110 a share, 122, some really bullish remarks from the analyst community, unfazed by their first quarter results. So 106 seems more reasonable given that we're trading right below about 105 right now. But analysts still have a pretty strong conviction in this name. So with that mindset, Alex, and some of the upside price targets we're seeing, walk us then through an example trade leading more bullish in nature.
Yeah, and I kind of went through, to use sort of an analogy, you go buy that Starbucks coffee, you want to have that first drink, but it's scorching hot, so you got to wait for it to cool off. And so maybe that's what we're seeing a little bit with this stock price. It's had a huge run up in a very short period of time. It's now disappointed on its earnings release, and it's just kind of
moved with the market there.
A bit. So if you're kind of looking at that to be the playbook going forward, maybe you still have an optimistic viewpoint on this company, you want to lean bullish, but you want to emphasize the neutral aspect as well. And so using this down move as an opportunity to
Oil's
get
really
some
just
of
taking
that
a dump
bullish
today.
exposure, neutral to bullish exposure, selling a put vertical going out to March, using the 100
More
strike
DD,
as
the
our short
bond
strike,
payment
and
was
then
done.
defining the risk
Vanguard
by buying
account
the
got the payment.
97.5 strike. If we could
Really?
collect somewhere around 50 cents on that, that would be 1/5 the width of the strikes. It would mean our total risk is 4 times more than our total reward potential. $200 relative to $50, not accounting for transaction fees in either. Break even would be $99.50. You simply subtract that credit away from the short strike of 100. And as long as these options expire worthless, you'd anticipate that full profitability, again, net of the transaction fees. But I think most importantly here, Jenny, obviously we've gotten an update on the fundamental front. The news wasn't perceived as positive. There's always a chance that this could continue or be the beginning of a longer-term
I know what you mean, Hurricane.
downwards trajectory. So it is risk-defined. We know that max loss going in, and whether the stock goes to 95 or 55.
I know, right here, this little
the
9.
risk
I
will be the
noticed
same.
that.
Right, now to switch gears to another name that is a
The
little
wick.
bit more polarizing among the analysts today, as I've seen several sell ratings and several buy ratings, so a little bit more difficult to gauge the reaction to Ford here, although from a pure price point perspective, shares are lower today. This is a pretty big move for a name like Ford. So Rick, technical front, earnings behind us as well, but this name has experienced a good degree of weakness, at least compared to a Starbucks this year.
Yeah, maybe.
Definitely.
I know. I was noticing that a bit.
Some weakness, but
it's kind of
it
ugly
looks
with
like
these
we
candles,
stopped
but
at an important point on the chart. Right here, we can see the 13
it is kind of bullish
level,
still.
and that is the intersection of our yellow 21-day EMA, our orange 63-day EMA, and our downward sloping trend line.
Maybe going long here.
This is the kind of thing you want to try to look for when you're a technician. These kinds of confluence of multiple indicators combining near the same level adds greater weight to that price point. The overall shape of the price pattern we've been seeing looks like a descending triangle, a downward sloping trend line going across the highs, and a horizontal line going across the lows. And that's interesting, I thought, because the price target that they listed was $11, which is the point that I drew here without even realizing where it was, what the price target was. So that seems to be the thinking behind the change in this name, that $11 level. They're looking for it to move back to the lower end of this range here. And we can see as well, RSI mostly following price action. Momentum is not really giving us a ton of clues, but it is worth noting that we're still in the bullish side of the camp here. We did not break through convincingly to the downside below our trend line, so that's at least a slight bright point for the bulls here.
This is the
1450 level
9
looked
moving average.
important to me to the upside. That was the start of our gap down here, and it's where price topped out here. And
Yeah, I
here.
actually went long
So
here
we
also.
have,
I feel like I'm
some
overtrading it, but we'll see.
previous price action to go on here, 1450 to the upside there. The $13 level to the downside looks very important as well, because that could be a significant breakout if we push through all that support there.
Yeah, I like that you highlighted the fact that we are, despite the fact that we are seeing some steep selling today, shares are still up about 28% from their yearly low, and you can see that outlined very clearly. $14.50 to the upside, $13 to the downside. We will leave it there. Appreciate all of your technical insight all week long. Vic Ducat, our chart master. And then, Alex, when trading this name, I liked the analogy that you gave, waiting for your coffee to cool off a little bit. But say with Ford, you were full speed ahead. You were a big believer in some of their more recent price cuts. You were a big believer in their push into EVs. Walk us then through an example trade that leans more bullish.
Yeah, and using this
Make up the $3 up to 416.
Both to be a little contrarian, but also as an opportunity to get into a name that at one point was trading significantly higher than this. So we know that there's been fundamental reasons for the sell-off. There's been macro reasons for the sell-off. But if you're a believer in the company, maybe there's opportunity in buying into the weakness. And so looking at a risk-defined spread strategy, one of the things I think draws many investors to a name like Ford is it opens up the strategy playbook a lot because it's a cheaper price per share. You know, 100 shares of stock is only going to be a little bit over $1,300, where 100 shares of a name like Apple is going to be more like $15,000.
Yeah, I read his post, Aaron.
That way, I think it opens up the strategy.
Yeah, thanks for sharing, man.
We're still going to go back to sort of the basics here.
Kind of gotten whipsawed back and forth,
and make it
like
even
I have.
More accessible here. We're
Oh,
buying
that's a bad
13,
rejection.
14 call vertical. So kind of your classic one in the money, one out of the money spread here. And so while it's only $1 wide, if we're able to spend 50 cents on that, this goes out to March, of course, as well. So St. Patrick's Day for that expiration, a little bit over a month and a half away. You'll get that 13.5 break even, pretty close to where we're trading. We've talked about that, trying to get that break even near the current prices on these directional trades.
See how this candle closes, but could just be consolidating before more downs.
$50 in
Bear
risk
flag.
to $50 in reward potential, not accounting for the transaction fees in this. So anything above 14, that would potentially be max profit as you'd anticipate.
But I try not to
These
front run the
options
candles
go
because
through
that
the
was a green engulfing.
automatic, exercise and assignment
And now it's
process.
turning
And in
into
the event
nothing.
that it was below 13, we'd anticipate these options may
front run the
expire
candles.
worthless, which of course, when you're buying a spread, is the worst case scenario. So sort of the bullish version of the buying premium strategy in Ford, and we did the bullish selling premium strategy in Starbucks. So
Head and shoulders
kind
bottom
of
on the
different
one-day chart
sides
in
of
GME.
very similar coins.
Let me
But
see this.
when you're looking at this, I think that when you're buying a
Head,
spread,
shoulder,
it would be perceived
shoulder,
as a
sort
little
of?
bit more speculative, as you'll likely need something to happen to reach that max profitability, where when you're selling the spread or you're selling premium, oftentimes you're in the max profitability zone. You just need something not to happen.
A normal head and shoulders, not inverted.
Right, I like this. Two different ways to look at two post-earnings moves.
Oh, head and shoulders
in
bottom,
very
so yeah,
different
inverted.
companies, but both seeing a move lower today, Ford and Starbucks. But
Yeah, there's not
also
much of a
important to
shoulder
keep
on
in
this
mind
side.
for both of our example trades
Maybe
today
here?
that multiple legs can lead to higher transaction fees.
Here. I
Short
don't know.
options can be assigned at any time, and carrying option positions into expiration
Like a
can
V,
add
the
additional
V
risk,
neck.
like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO, the unlikely partnership.
Not going to get a
that
green
I
on this
would have
30, I
never
don't
seen
think.
coming. That
Got
is
40 minutes
GM
left, or
and
4 minutes
Netflix.
left.
GM and Netflix will discuss more on that and perhaps some of the backlash that Netflix has received after its password sharing protocols were leaked. We'll dive more into those stocks coming up next.
Loud noises. Sorry. We'll see. Those dojis could be good. I don't know. I have this line here. What is it? Oh, it's that. So that is somewhat of a support. Hit there the other day. That was a support. Pre-market support. So it has some merit. I'll probably, my stop on this will be if it breaks below. Breaks below kind of here. Then closing this one, maybe 414, maybe VWAP. Don't want to get greedy on the upside either. I didn't get a very good entry. 30 minutes not going to be green, it's going to be quite red. I feel like this thing's about to flush, man. Boy. Is it just bear flagging? Got 2 minutes on your 30-minute, but you need a lot of movement to get it. You'd be back up here, I think, to get it Green 30-minute candle.
December and up 10% from January a year prior to. This is according to a Reuters report. Now, Tesla said for the second straight month, the U.S. electrical vehicle maker has lowered prices. We know the price of the Model 3, that rear-wheel drive, the basic vehicle, listed at 59.9 million yuan, so just under $49,000. That was on the company's website, down 5% from just a month ago. The Model Y down nearly 13% from the January listing price. That was a 94.73 million yuan.
I'm out.
It's down to 82.69. Now, let's just take a look.
Just
here,
get back all my
this
gains
rally
on
that
stupid
we've been
move.
seeing from 100
More
up
flushing.
to this almost 200 level. I want to point out it is somewhat counter trend to the bigger picture move that's been playing out. So you see Tesla had actually be coming off. We knew Elon Musk was doing some selling. There was a lot of distractions, right, in terms of the Twitter exposure and Elon Musk. This rally we've seen was with Elon Musk going
down
to court
1%.
about that famous 420 post ultimately.
I guess it never went that
And
high today.
I just want to take a look here real quick at what's going on with the daily time frame, because notice this. We've got a bit of a reversal in trend, right? This big momentum that we talked about from 100 to 200, Alex, was quite the turnaround in terms of what we had been seeing areas of value forming at a lower level and now taking out key areas that were established on the way down. A significant move up here, Alex, on the technicals, but it has fundamentals behind this as well.
Yeah, and I love the breakdown on the chart, Ben, because it's almost a reflection of risk tolerance and investor sentiment in a way. It's almost exactly the opposite looking chart of, let's say, the VIX, for example. There's a lot of names. One in particular we're about to talk about in Netflix.
I
that
actually
look
went
quite
back
similar. Meta Platforms is another one I would
We had
throw
the
into
break.
this
Might
mix.
as well.
We've heard about the meme stocks as well, making a little bit of a comeback. Nothing like what we're seeing in Tesla, but all of those animal spirits, as they're oftentimes referred to, seem to be bubbling up here, which is very, very different than much of really the entire of 2022 in terms of trading and risk taking. So excited to see where things go. It's only the first, actually we're now in the second month, but we only got one of these months in the bag so far in 2023. We'll see where things ultimately shape up. Ben Lichtenstein, always a pleasure, and thanks for joining us here with the development story on Tesla. Let's bring back in Jenny. It's time for FOMO. Sort of a double story here. We got General Motors kind of bridging the autos conversation again until Netflix, which is where we're going to ultimately end. But these two, it sounds like, are making a partnership.
Yeah, and one that I would not have suspected that these two companies would be coming together. But GM is definitely very focused on investing in what gets new eyes, focused on enhancing its EV offering, so appealing to perhaps that next generation of investors and consumers. So they did announce they're partnering to increase the presence of electric vehicles in Netflix-produced shows and films where relevant, while also taking steps to ensure more sustainable products. Now, GM's global chief marketing officer said that entertainment has a huge impact on culture, and they want to make EVs famous on streaming, small and silver screens, to build an EV culture where storytelling incorporates the experiences of driving and owning an EV. I mean, I think that makes actually perfect sense. I thought that after, being a bit of a doubter on this partnership, I understand that the more you see EVs in everyday culture, the more you perhaps want to buy an EV. He did say that Netflix is a great partner because of the company's compelling storytelling, as well as their commitment to sustainability and track record of sparking new conversations that shape cultural trends.
It's a bit of a chase. It's high.
Of the partnership,
no doubt, but I'll hold it for a bit. I don't want to get back into Hellbiz.
Build and understand how EVs can complement and enhance different storylines. So over the course of the next year with this partnership, you can expect to see more GM EVs in select Netflix shows and films, like their Chevy Bolt, their GM Hummer EV, and their Cadillac Lyriq are some of the big vehicles that were listed in this press release. So odd story, interesting story. I think that more so the reason we've seen less of an adaptation to EVs is just the fact that a lot of consumers can't afford to go out and buy some of these more pricey vehicles. But the other thing that was obviously discussed this week in Netflix is the fact that their password sharing measures were leaked or accidentally posted to their company website, since been taken down, which to me, I thought this was just the announcement, Alex. I didn't think it was actually leaked until then it was taken down. We've seen a bit of a negative backlash across social media. I saw this not only on Twitter, but on TikTok, on Instagram. People were outraged. But first of all, this was coming. Second of all, Netflix estimates that about 100 million households do not pay for the Netflix that they are using. I think that to me, so say, for example, I'm someone that's been using a family plan. My dad pays for my Netflix, but not stealing. I've just been using a family plan. So say that that was no longer allowed and then I had to sign up for Netflix. That's exactly what they want to happen. Or say I said, in the other aspect, say I said, okay, I'm going to delete Netflix. I don't want to pay for it myself. That is no loss to Netflix because I wasn't paying in the first place. So the negative backlash was completely dismissed by the street, as Netflix shares have still fared quite okay this week. I mean, they're up about 130% from their low. So not at all the tragedy that social media would make you think.
Yeah, so first thing, the GM Netflix thing seems like a story as old as, film and TV shows have existed. It's no accident when they take a drink of a particular,
is a great example of trying to time it too much.
Or
and
Pepsi
just
can,
giving away
or they
gains.
get into
So
a particular car.
entry here was great.
Brand
This was just
placement
bear
and
flagging. Of course,
basically
it's
anything you're
hindsight, but
watching. Now we
I just let my
know
stop and just
that it's going to
left
be mainly
it.
GM electric vehicles
Not
in
try to
Netflix
time it
program,
until
and we know why.
the reversal actually happens.
As for the password
and
sharing thing,
just
I almost see it as
slowing.
that, hey, they were fine with it
Momentum
because
slowing
it
doesn't mean the
allowed
move's
them
over.
to accumulate interest in what they're doing. They've also reached sort of a peak in North America
So
in
trying
terms
to
of how
time it
much
and even going
they're
long.
being
It's
able to get new subscribers, and so this is a way to, kind of expand that. One
It's
thing
a
that
bit
they're
of a
going to have
support
to
there, but-
probably realize, and it'll be notable after, is how does that change the amount of time each account is actually
Turns profitable
spending
trades into
watching?
unprofitable
Because
quick.
before, may have looked like, one person or one account was watching countless hours of television, but it could have been several different people accessing through that same account. So it may change some of the viewership trends. It may change some of that info that they're using ultimately to sell to advertisers, but it could boost those subscription fees, even if only a small fraction of those who are using other accounts or sharing accounts ultimately sign up themselves. But everything has sort of that counteracting force, so it's going to skew things a little bit, but naturally it was always going here. They could offer things like student plans, ad-supported plans. All of this seems towards it's moving towards something where they're going to kind of milk as much as they can out of the populace.
Right, and the one argument I guess I understood is that Netflix at one point was notorious for being the streaming service that said you could stream anywhere. You could stream from your phone, from your iPad, from your TV. You could take us on the go. That was the initial platform they launched on. So then now with the fact that you cannot access your Netflix from beyond your one household is where people say, if I'm traveling, how does that affect me? They do have a way where you can sign up for a temporary account for 7 days. It's a bit of a hoop to jump through, but just all in all, the backlash I thought was interesting on Twitter because it wasn't reflected in the stock, A, and B, the outrage is from people that weren't paying. So again, I don't think Netflix necessarily looks at it as lost revenue if you weren't paying to begin with. And I can understand that, given that I am part of one of those 100 million households that was not paying for Netflix. So interesting. Raymond James said this is actually a huge positive, that all of the churn we could see from those that then cancel the subscription will then be offset by those that sign up, that are converted into paying subscribers. I think a step in the right direction for a company that has basically dealt with a lot of freeloading over the last few years. But Netflix shares have maintained their green today. They're up about 0.8%, not necessarily a stellar day, but they've really held on to the gains that they have been riding ever since their fourth quarter report.
And really, it's been since basically the summer of last year that we've seen Netflix make a pretty meteoric rise and comeback. As far as the policy changes that they're making, they overstep and they make the consumer experience worse. They'll see that in their numbers, and they can error correct if they're good at assessing data. So it's the same thing we were talking about with Starbucks earlier with their reward systems being revamped. If it really has a meaningfully negative impact, they can always walk those rules back and change things. So time will tell ultimately the success level, but you can see why analysts are excited, why investors are excited. It could boost up those subscriber numbers, get more people involved, and of course bring in more revenue, which is ultimately the goal if you're an investor in a name like Netflix. From a trading standpoint, though, I mean, this is the name that marks the comeback. I mean, this has been a huge run in a fairly short period of time, and it still has so much farther to go if it's ever going to get back to where it once was of over $700 a share. It's only about halfway there. But say you wanted to kind of follow that same playbook that we applied in Starbucks, where you maybe are looking for a bit of a cool-off period in Netflix, especially as they work through some of these kinks. Maybe you're looking at a neutral to bullish strategy, and that's what we looked at here. Selling a put vertical, going out to March, the 350, 345 put vertical for $1.25. That would be a $125 max profit, $375 in total risk, not accounting for transaction fees. Break even of $348.75. And again, a risk profile that sets up for a higher probability of success than just simply buying the stock, because we have a break even that's lower with this illustration than the current share price. And if the stock were just to go sideways or even slightly lower, you can actually be at max profit still as long as time passes and ultimately these options expire worthless. So risk defined, and then most importantly, you don't have to be right. You just can't be wrong for this one to be not only profitable but fully profitable.
Yeah, and I always like the concept of not having to be entirely right, because obviously there is a good degree of volatility in this name, even with its run up since, like you said, Alex, really since the summer. It's been strength since their fourth quarter report, but really that strength has been a much longer story than that. So Netflix still pacing to close out the week positive, and also fueling the fact that it is up a whopping 130% from its lows. What a move it has been in Netflix. And hey, GM also posting a 10% gain this week, or expecting to post a gain this week. So very different move in GM this week than its peer Ford, which we just discussed. But that'll do it for our FOMO segment. Now, coming up next, we will talk another nice move higher today, and that is Nordstrom surging on the day on news that activist investor Ryan Cohen is investing in the retailer. We'll dive into that story with Renita Young coming up next.
That dude makes headlines now. Coming back down. I'm not too sure. I overtraded here, unfortunately. Gotta remember, I want to reduce the amount of times I'm timing the market. Increase my success. There's a new low. See if that 412.07 supports on there. Not kind of a soft support. Say this down here is definitely a strong support. GME's coming down with this. BBBY kind of unfazed a bit by the market. Alba's moving back down to VWAP. Oh yeah, it broke that support. Yikes. So probably move down here to 1394 or so on MSGM. That's another ugly candle, daily candle on GME. But they're almost back to break even on GME.
Taking a stake, and he is famously tied to GameStop. I have a complete mixed picture when it comes to Ryan Cohen because he was also credited with the pump and dump of Bed Bath & Beyond stock back in, I believe, in August. So he's involved in, I'd say, some more scandalous aspects of these meme stocks. So now pushing into Nordstrom, a company with credibility. Interesting move here.
Oof, you're absolutely right, Jenny. Also, he's made his millions and maybe even billions off of Chewy. So he's known around the market. But you can see this stock is rising. At one point in pre-market, it was close to 30% higher. Right now, it's hovering around 20% higher. And it's on the news that Ryan Cohen took a large stake in Nordstrom. No word yet on just how large of a stake, but he wants to make some more efforts to cut costs at Nordstrom. Among other things, he wants to refresh the board as well. That could mean moving people out possibly, or maybe even moving people around, switching them around. But more cost-cutting measures is one of the primary goals. And so as a result, Gordon Haskett upgraded Nordstrom from reduce to hold with a $22 price target. And so markets are going wild, but the analyst there keeps a negative thesis on the fundamental side of Nordstrom's business. He believes that activist activity in the name de-risks the downside scenario despite the weakening trends at best.
Yeah, I was going to say, Renita, this to me isn't always the most exciting reason to be involved in a company, but Gordon Haskett laying out some of the reasons why maybe, just maybe, it can be seen as a positive beyond just the kind of headline-grabbing nature of the individual himself that's doing this. So kind of maybe, I guess the idea is putting in a floor because they're going to tighten that belt a little bit as a result. They're going to be forced to look within. And we know that's been the theme of investment over the last couple months. I mean, Meta, no more name clearer than that. Yeah. They pivot from their CapEx towards layoffs and cost cutting and efficiency, I guess is the word that they like to use. And you see the stock basically double. And so see if the same can happen in a name like Nordstrom. Always a pleasure. Senior markets correspondent for the TD Ameritrade Network, Renita Young, with the latest. Markets sinking here a little bit. We're going to take a short break. We get back. We're going to look back at the week that was, in particular, the earnings.
Close this at these levels on the futures. 4135. Let's see. 4135.40. Can I do that? No, 4135.50. There's even 4135. Oh, it's rejecting the order for some reason. Why? Why are you doing that? There. Oh, that was a mission. I think we do see a test of this. Not sure if it goes lower. I'll be closing out there though. Pretty big doji on that downside. Thank you guys for your likes today. Legends 49. Thank you. That is neat. So we've got 1 minute basically for that candle to close. Put a stop. About that much. That. About to put a stop. Pretty big bounce there. Maybe it is respecting this level. Well, I almost put a stop limit in there, but it would have triggered right there. Trading at tight range. Only I held this. Just yesterday got me shook. That move. Well, moving on up, huh? I don't like it. I'm out. Hey, Audi.
We know that sales have been decelerating year over year, and that's been the case with the stock down significantly over the last year. Our earnings were down significantly compared to sales. So what did the company do? They addressed that operating leverage issue. In other words, address the cost of those sales, and that's what we're actually seeing manifest higher for our Meta platforms. The margin improvement was so big that this is where you actually see the biggest stock movement. I think if you look at companies like Amazon, for instance, you're seeing effectively looking at core services versus non-core services and the aspects of the consumer still being hampered from the standpoint of household and durable goods. Overall, Amazon Web Services, which really represents only about 16% of their sales, 78% of their operating income, Amazon Web Services decelerating about 20% year-over-year growth. That's down about 600 basis points compared to the same quarter last year, for the previous quarter on a comparative basis. So what we actually see is, despite the sales beat for Amazon, earnings miss was huge, and that's why we see the stock to the downside. Effectively, the higher margin component of Amazon's business is showing deceleration in sales, and that's the Amazon Web Services cloud business component of their business. We know that the consumer is stretched because you can see that in both Amazon's numbers, but here's the thing, also in Apple's numbers. If you look at Apple, the consumer hardware element of their business, for instance, the iPhone, sales were down 8% year over year, but services, again, higher margin component of their business. If you look at organically outside of the aspects of foreign currency adjustments, it grew 13% year over year. That's the services side. So the higher margin business for Apple, the growth area of Apple is in services. That's why we see that stock higher, despite the fact that its core sales product was down in sales 8% year over year. I will tie in Google here for a sec, because I know they're all different companies, but if you look at Google, the same kind of comparison I can make with Amazon Web Services. If you look at cloud computing for Google, which is essentially a non-core business for Google. We know that ad spending is down,
was the bottom,
as well as search is down. But the non-core growth expectations for Google and cloud was expected to be higher. They missed the estimate, and I think that's one of the reasons why, again, we're seeing Google down. So Apple doesn't have a lot of exposure to the cloud. We see it higher. Neither does Meta platforms. Meta had the most to gain from cost reductions. We see the most results this week from that company. But Amazon, I think, and Google are tied together because we are seeing cloud computing growth in total actually decelerate. So they're competing for market share, but that total addressable market is also not increasing as fast as it was in the past.
You know, George, I want to talk about Apple and Meta specifically here as sort of illustrating a point. So much of the success of all of these mega cap companies over the years for investors has been that these companies have earned the trust of the investors, that the moves that they've made have paid off time and time again. These companies have grew into juggernauts within the businesses that they operate in because of the decisions of the teams that are at the helm. A company like Apple navigated last year far better than most of these other companies in the marketplace, and it didn't do anything to break that trust. So you look at its numbers, they're not great. Their projections going forward, also not that great. But there's this investor confidence that Apple has garnered over the last decade, and people just trust Apple. They're like, oh, you tell us it's going to be bad? That's fine. We still believe in you. Meta was like that for a long time, but broke that trust last year when it was so sort of tone deaf to the amount of money it was spending, yet the declines in its businesses. It made that realization, maybe in some cases too late for some investors, but now it's like pandering, it seems like, to get that trust back. But it's working. It's telling the market exactly what it wants to hear. And maybe that's the only path it had to get short-term success in terms of shareholder returns. Thoughts on kind of that aspect of this is it's not only fundamental info, it's also trust and market messaging.
Yeah. Well, a lot of things there, Alex. I mean, if you look at Meta Platforms, I mean, its core business was down so much because of the huge ramp up in ad spending during the pandemic that it had the most to lose because it doesn't really necessarily have other insulated revenue streams. It doesn't have cloud computing. It doesn't sell phones. So its core ad spending revenue was down so much, and it couldn't cover costs fast enough. At the same time,
61%. Look at that.
Core revenue. In other words, the metaverse. They haven't generated revenue in that area of their business yet, and that was a huge expense they took on, probably at the worst time in the last 10 years or so. So they addressed these issues. First, they cut the workforce back. That's one way to improve operating metrics. But two, once you stabilize effectively your revenue base and demonstrate to investors that you're doing something about your business, despite the fact that it's still a profitable business, the challenge had been in the last year profit growth. And once you address the profit growth issue, which takes a couple of quarters, you'll see that if you look at a weekly chart in Meta Platforms, you see major trend reversals like you're seeing. It's still a trusted name. It's still a ubiquitous name. It's basically a social media monopoly. But they had a very large structural challenge in the last year that they're addressing. And that's why you see a major turnaround. It's easier to move that one as well just because of the market capitalization, albeit again, I think it's like $400 billion now. It's still a lot less than the other major mega caps that we've talked about today.
And I feel like from Meta, George, we saw such a tone shift for the first time in 18 years. They really have addressed efficiency, not growth, which I think after their whole metaverse rebrand, that was something very welcomed by investors. But we'll leave it there, George. Really good summary of these earnings, as there was a lot to get through, and these are all very different companies, although we oftentimes group them together. But George Tillis, appreciate all of your thoughts, senior markets correspondent for the network.
China's Xi has ordered military to be ready for Taiwan invasion by 2027. So, still don't know what really sparked this drop. I don't know if it was that. That came out like an hour ago. Not sure if there's any news specifically for this, but I kind of just consolidating down here in this range. Might try along if we do hit this 411. GME with a little bounce. Kind of with SPY. Alpha is holding up above VWAP. Be nice if one of my chasers would work in the short term. MSGM right back to the bottom of my list where it was. That was crazy volatility. The 68% of companies reported S&P 500 Q4 earnings are down 20% year over year. The third straight quarter of negative year over year growth and the largest decline since Q2 2020. But a lot of them beat expectations. In green on the 30. Just closed. Tiny green. Is that the 30? Oh no, you've got 30 minutes for that one. That one's red. This one we gotta wait half an hour. That gas actually broke through VWAP to the upside.
Into the red as well. The pressure is on these markets overall. Just to say, real estate, consumer discretionary, utilities, among the worst performing groups on the day. For some of the biggest stories in the markets, we welcome in Renita Young, senior markets correspondent here on the TD Ameritrade Network. Part of the pressure coming from the mixed bag of earnings that we got after the bell yesterday, most of which were not particularly great. While they're great companies, some of the numbers didn't wow Wall Street. Your thoughts on Amazon, for example?
Well, Amazon shares have been falling ever since post-market yesterday when earnings came in under expectations. You're seeing that slide today. Sales, however, did beat expectations, and the company offered light guidance for the first quarter of this year. Now, if we take a look at the numbers, earnings per share was 3 cents. That was well below the 15 cents estimate. Revenue was above estimates at $149 billion. Services sales were nearly $79 billion. Product sales were just $70 billion, a little over that. And AWS has been a huge concern as cloud computing has been seeing a pullback. That came in at $21.4 billion. It was a 20% growth, but it was still short of expectations. And then the other big number that everyone was looking at was advertising. Came in at $11.56 billion versus $11.38 billion expected. So that was a sigh really of relief for the company. And of course, analysts have been making calls since the morning. Piper Sandler raised the price target from 119 to 123. And it has an overweight rating. Baird also raised the price target from 120 to 125 with an outperform rating. UBS and Barclays both raised the price target, and while UBS rates it as buy, Barclays rates it as overweight. And moving forward, Amazon's guiding for the first quarter sales between $121 billion and $126 billion, and that was also within analyst expectations.
All right. Thank you for all the details there and some of those analyst calls as well. And then there's Alphabet. What's going on there?
Google parent Alphabet also sliding today. Now, these tech companies and social media companies, they have not been doing well in this fourth quarter of the year. Earnings and sales missed expectations for Google, for Alphabet, and the company revealed how much money they will incur after laying off 12,000 employees. That's the largest to date of the tech companies. Adjusted earnings per share missed estimates. It came in at $1.05 versus $1.20. Revenues came in just below expectations. YouTube ads were close to $8 billion. Google advertising close to $60 billion. Google Cloud, $7.32 billion. Analysts, of course, making calls. Oppenheimer raising the price target from $130 to $155 at an outperform rating. And I'll just give you one more. Morgan Stanley raising the price target from $135 or from 125 to 135 with an overweight rating. And looking ahead, Alphabet also estimated that it'll incur between $1.9 billion and $2.3 billion in employee severance charges.
Thank you for all of that. A big picture look at some of these mega cap tech names. We've had such a great run.
It's expensive firing people.
But obviously faltering in the last 24 hours.
Yeah.
Renita Young, thank you.
Thank you.
Now let's get a look at the bigger picture. Randy Sevchuk is with us, President, Elite Group Retirement Services. Good to see you, Randy. Thanks for being here. I feel like we've had a heck of a week, right? We've had the Fed, we had this big jobs report, we had a lot of earnings. Let's just start with the jobs picture. Obviously, it was astonishing to see just how tight the labor market was with this gangbusters 517,000 when the estimates were 187,000, and the revisions were higher too. Your thoughts?
The FTSE just hit an all-time high, I
Hi,
think.
Nicole. It's great to see you again, and happy
The China
New Year
market.
to you. It was quite the crazy morning. The payroll report shocked the markets early by having almost 3 times as many jobs as the 185,000 that was expected. So that sent a pretty wild ripple effect through the market sectors. So I guess the question becomes, what's the best way to interpret these numbers, and what does it mean for market sector investment? So before we sort of get into sectors I like and sectors to avoid, I want to give a little bit of perspective and look at this through the prism of both the GD report and last week's consumer sentiment report. The three of those together will sort of give us an idea of what some of these numbers really mean. So
yeah,
today's
I'd love to know what your takeaways are from that. I mean, at this point now, because we saw jobs added in pretty much every area.
Right. You're right. I look at today's payroll numbers as how the market is viewing unemployment. So the combination of job layoffs and then new jobs indicates that the market sees this more as right sizing to correct the overhiring from COVID and not as an imminent sign of recession. But I temper my excitement about that a little bit because there has been so much money sitting on the sidelines since early fourth quarter that I'm wondering if that's just not getting anxious to get into play.
Yeah. And of course, so incredibly well, we see these jobs added even though we've had all those layoffs in tech. It's amazing. It's true. I mean, I think everybody was floored today when they saw those numbers. And I'm willing to bet, based on the people I've spoken with, that we're going to have a revision. I wonder. I don't know. But people say we'll likely have a revision next month, right? You think we'll be revised lower a little bit after this?
I do. I feel that way because right now unemployment is at its lowest rate since 1969. And when you see what the Fed is trying to do to really stem the tide of inflation, unemployment is going to have to go up in order for us to decrease in any meaningful way the effects of inflation on the economy.
Right. Okay, let's go over some of the sectors because you have the do's and don'ts in the world for investing strategy. Let's go with the do's first. You have energy, healthcare, even technology.
Right. Energy I have in here because even though natural gas is on a 7-week drop, we are still in winter and people need to heat their homes. That consistent drop can't go on. So that will have to correct in some point. In regards to healthcare to me is looking for companies that are investing in regenerative treatments because the population in the next 8 years, 150 million more Americans will reach retirement age.
Background
so that's
shows.
a great long-term play. But technology you mentioned, to me, that's the canary in the coal mine. Meta is up. Google year-to-date earnings are up. I think if investors are using the S&P as their proxy, they can't mathematically get back to those highs if they don't get major participation from technology. And it's not only the biggest sector, but it's equivalent to the bottom 5 sectors mathematically. So if we don't get it to participate, you're going to have a difficult time pushing back to the old highs. So watch tech closely.
Right, understood. And it's interesting how you have tech in there. I mean, what do you make of the run we've seen? I mean, when you see ARK Innovation Fund up 43%.
No, he doesn't have an office.
Was up 27% this
Rome.
week. I mean, as of an hour ago. So, I mean, Would you
13th
take some money
century.
off the table on some of those biggies?
I wouldn't, because I think we're seeing a delayed reaction now to some of the tech layoffs from last year. You're going to start to see their profits and their efficiencies go up. I think it's that simple that we're now seeing that as a lag effect.
Right, understood. And on the opposite side, you have the areas to avoid, which include real estate and consumer discretionary. Why?
Yeah, right. Real estate, to me, consumers can't afford the holy trinity of high interest rates, high home prices, and falling incomes. Home ownership affordability is at its lowest level since 1983. And that is going to be, I believe, the last thing to correct itself once we start seeing inflation eventually come down to more moderate levels. In regards to consumer discretionary is the other one I have on there too, because this is a $7 trillion sector. And inflation, in my mind, is going to drive the volatility. So we have wages that grew 4.4%, but more importantly, that was outpaced by inflation at 6.5%. Consumer spending is going to decrease as long as the value of the dollar continues to decrease as well. It's that simple.
What do you think the Fed should do, and how will that affect your investment strategy?
They seem to be dead set on continuing to inch up the interest rates for as long as it's going to take to bring inflation under control. So my best strategy, and again, you know, I look at things through the prism of retirees and people who are within about 5 years of retiring, is to stay diversified as much as possible and to make sure that you have a very healthy fixed income bucket, whether that's in the traditional 60-40 bond split, or if you're doing something more towards a fixed indexed annuity to provide you guaranteed income as well.
All right, Randy Sevchuk, thank you so much. Wonderful to see you.
You as well.
Group Retirement Services, thank you. Later this hour, we are ready to talk to Dan Ives from Wedbush to talk about all about these Apple numbers. How bad are they? Or maybe there's some bright spots we need to talk about. Check in on the IPO market for 2023. It was pretty dry of late. And our panel is ready to talk about all things in the jobs report, that big beat. What do we need to know? The
Eyes
watch
coming
list.
down
We'll be right
here.
back. Stick around.
Oh, GME with a little pop. Without the market. Looking a little uppy here. That gas continuing up through VWAP. And come back down.
Should test the levels of that we saw in August, which is roughly another 100 or so points higher on the S&P. January was a great month, but I don't think we're going to annualize it 100% this year. So many things are going right for the market, and the key is that there's so many bears and so many doomsdayers that refuse to see what the market's telling us. They're staying on the sidelines. They're in their bunkers. Market's telling a different story. You've got a full risk on. You just mentioned Bitcoin and semis and biotech and the NASDAQ 100 and small caps. All the risk on sectors are leading. Doesn't mean they can't fool us. They fooled us, in January of 2001. But you've had multiple buying stampedes, which usually means there's more money behind it. And the key is the market, like we saw with earnings, the market's not responding poorly to future guidance, forward guidance being less than adequate. You have these one-off or 1.5 off days where stocks pull back and the bulls come right back to work. Today's that classic case. Look, you're going to have Dan Ives on later. Everyone was lining up to bash Apple. It's trading pretty well today.
Look, it's held up. I mean, week to date, it's up 7%. It's had a great run, even though I know some of the earnings were a mixed bag and some disappointments. But the big picture is Apple has a lot of great things going forward. And you're right, Dan will explain that more. But at this point, I think the mentality is a really important point that you're making, because there's been a lot of talk that if people talk enough about recession, that's a bad thing, because that will push us further into recession.
So a self-fulfilling prophecy for sure. You can't do that with stocks, but my argument is this. I said this throughout last year. Market went down S&P 25% at its worst in 2022. That's the average decline when we see a mild recession. So I kept saying the market is pricing in what's coming economically at some point in late 2023. Unless you really think it's, get in your bunkers and buy spam and bottled water, and we're going to have a recession like 2008. The market already gave you that in prices. So you mentioned, we know Apple isn't as bad, and the Googles and the Metas and the Netflixes and the Microsofts, they're all coming in and behaving a whole lot better. People went from overinvested here, now nobody wants to touch them. At the same time, you've got all the cyclicals are really perking up. The industrials, the transports ripped. In the last couple of days, obviously today's not one of them, but the transports have been ripping. So you've got a portfolio and a market doing one thing, and people are spinning a narrative that's not proving out in the markets. That was last year's news.
Right, understood. Let's get to some of the names that you like. You have Pfizer, Amgen, and Ecolab. Start with Pfizer.
Okay, so I'm keeping with my tradition of always finding stuff I like to find stuff I can give you stuff that's running and rallying, and those are fun already. But, Pfizer, it's not sexy nor exciting, and it doesn't fit into my risk on, category. But it's been really beaten down on a good tape. Almost 4% dividend yield. Some people are going to yawn, but I think this one, record year in 2022. It should be a record year in 2023. And for a 4% dividend yielder, I think you've got at least a 20% rally coming.
All right. So, just a good go-to name, huh? What about Amgen?
So biotech is one of our favorite sectors for the year. We are loaded up with biotechs, and we did coming into 2023. Amgen's another one. It's the behemoth in a sector kind of sort of out of favor. They bought Horizon last year. The deal's going to close some point this year. It makes the financials a little messy. So a lot of people, I think, are going to either avoid it or wait, take a kind of a wait and see. Q4 was a little soft, I'll admit, for Amgen, but the stock's beaten down. I think, like Pfizer, you've got a pretty good rally coming. This one could be all the way to all-time highs this year, above 300 for Amgen.
Yeah, a lot of people have been saying that biotech is really the name of the game for the next decade. Tell me more about that. I mean, when if it's not
that's
Amgen,
an easy
is
one
it the
because
ETF?
with the aging population, this is where the world is moving, health-wise. We need to come up with new therapies. That's where, frankly, one of my favorite holdings, Moderna. Where did Moderna come from? That was a kind of a fledgling biotech company I used to make fun of, and now it's not exactly Amgen yet, but it's going towards that. So there's hundreds of these tiny little fledglings, and they've all started. Not they've all. Many of them have started to go on exactly what you're talking about. That biotech will be. It hasn't been in favor in a number of years. I think this is the year.
Maybe this is the year. Hey, everybody waited so long for energy, right? They waited a decade for energy, and then they did so incredibly well. What about Ecolab when we look at cleaning solutions?
So that's another one. Tell
me about that.
Former high-flying, super expensive industrial stock. I first started liking it because of the pandemic. It was a pure play in commercial sanitization, the Purells and that kind of stuff you see around the kind of office buildings and corporate facilities. Stock got beaten down. It hasn't gotten Wall Street's love yet. It's gotten frankly nowhere since last May. This is another one where it's been tossed to the curb. It's got phenomenal underlying fundamentals, great management. They spun off a horrible pool division 2 years ago. That was their worst performing asset. This is another one, I think, at least a $200 stock this year. So you get three that have been beaten down. You don't have to jump on board of a train that's left the station. You've got three where I think you can buy more comfortably and know you're wrong because the lows are so close.
Yeah. Paul Schatz, great to see you. Thank you so much.
You too, Nicole. Thanks.
Heritage Capital. Coming up next, Dan Ives, all about Apple. He's from Wedbush, and he'll tell us why he sees some
Pretty slow day. Buy is down 1% though. Intraday move is pretty large, but nothing crazy yet. Looks like we're gonna get an hourly red under the 9 here with a bearish MACD crossover. So maybe a red Monday too. That daily candles so far pretty bearish. Inverted hammer. Evitil? Are you tracking Evitil for me? Okay, average into this one. That's true, yeah, it keeps hitting there, huh? Don't look, just buy. I'm not your guy. Market's frothy. That old saying when your shoe shiners give me stock tips, you know it's time to sell. Like a meme or something. Like World War II, I think. Teens on Monday? Maybe. That'd be pretty dramatic. think that's a little too dramatic. I haven't really seen a big red day in a while, though. It's just also odd. It's been more big green days. All red days, big green days. So maybe we're due. Oh, $2. EVTL. I'll average down here. Yeah, I got more eVTOL shares. We'll see. Could be consolidation before another drop, but could not be also.
Need to rip
Look at
the
this guy,
Band-Aid off.
Steez.
And again, right now, everyone's negative on tech into earnings that it's ultimately been better than feared.
Are you worried about the U.S. dollar and foreign exchange rates? I mean, we had the dollar at 114. It's been hovering around 101, 102 right now. Is the dollar an issue any longer?
I mean, that's been a headwind, but I think that's telegraphed. I mean, to some extent, that's really understood here in terms of what's going on. I think the street will continue to look
Yeah, he's
at
breaking out.
constant currency growth, what's underlying growth. That's why when you look at guidance, as scary as
Guidance.
it looks in terms of bears trying to paint a negative last
Nice
night,
little bull flag
take
breakout
out
there.
FX, take out supply chain, it was actually better than expected.
So at this point now, it's a winner. Why do people get other phones? What is it about the other phones that people like instead of having an iPhone? So when you do a group message, they mess it up because they're not on iPhone. Why do they like the other phones?
But that's why, look, it just comes down to 99% of iPhone users, once they buy an iPhone, they stay within the ecosystem. And that's the ultimately really the recipe for success of Apple. Of course, you look at Samsung and others in terms of where people go, but look at market share. In market share in China, they've gained 300 bips in China the last few years. So you're up to now 1.2 billion iPhones worldwide. That's actually up double digits year over year. And look, and it's my view, which is why we will see a $3 trillion market cap in Apple, despite obviously a lot of the haters continuing to hate in terms of this rally.
Yeah, $3 trillion market cap. I can't wait to see it. So, you know, you always sort of give me the bull case is $200. I know your price target right now, 175. So 175 is your price target for 12 months. Is 200 the bull case?
Well, I think 200 is bull case, but when we start to get this reaccelerating story in China, comps get easier. Hey, look, and gross margins are huge. I mean, the fact, and this is a very important fact, the fact that they, because of their chips and their ecosystem, have more control, they're putting up a gross margin number that's really trending toward mid-40s in a down revenue year. Think about the margin leverage on that, and I think that's really a big focus of investors that I'm talking to in terms of that gross margin, that China reacceleration. That's ultimately the key.
Let's bang through some of the other names. Are you surprised to see Tesla up 68% in 1 month?
Look, I mean, you've talked about it was way too negative. Many view this still as a car company. It's a disruptive technology company, in my view, along with Apple, most transformational companies in the market. And I think the fact that they cut prices, now demand 2x production, you start to sort of run rate that. You have
The
hittable
tiki
to
bar,
beatable
yeah.
numbers. As an investor here, I think now you're going to see many chase this. And I think this is a stock that continues to move higher, especially also Musk with that Twitter overhang that started to go into the background. I think that's also taken, I think that overhang or black cloud over the story.
Yeah, and what's your price target on Tesla these days?
Yeah, so look, I think Tesla's another one. Like, I think that's going to be a name that's, we're breaking on
Price
200.
coming down
you
here.
can start to see a bull case 250.
Oh, I like it. Some of the other names that we often talk about, I mean, I think you talk about Palo Alto Networks, you talked about Uber. You want to throw in a few of the others so we get to pick your brain here?
Yeah, look, I think Salesforce.com, right? I mean, Salesforce.com, that to me, because of activism, because of the install base, core cloud stalwart, I think valuation looks attractive. And so many of these names, really importantly, sentiment is so negative going into these prints. I think Salesforce is one you focus on. We talk about Palo. I think CyberArk is another one on cybersecurity that I'd look at. And then, in terms of broader cloud, I think there's a handful of names. And there's also disruptive technology names like a Planet Labs, space big data play. And I think those
Wait,
are
is that
some names, I
golfing?
think, diamonds in the rough here.
It is.
How about AI? How come all I'm hearing about is Chat GPT and AI?
We're getting close to maybe going long.
Year or so. That's it.
I want
It's
to see a
the
little more
battle.
sell
It's
off.
code red.
It's an arms race going on, and Nadella had the first shot in terms of what he fired, and that's right, $10 billion. I think that's ultimately small potatoes relative to the amount of money that's going to be spent here. Alphabet's going to have to defend their turf. Apple's going to need to spend. It's an arms race going on, and we're talking about $800 billion opportunity in terms of broader AI. And I think this just really also shows they'll cut costs in terms of big tech. They're going to continue to be in the left lane of innovation. Artificial intelligence is going to be a key area.
You scared? Last quickie. Are you scared? There are some people who are pretty scared.
I mean, I wish I had ChatGPT in high school, but for tests. But ultimately, look, I think that they'll put some guardrails around it.
All right.
But for Microsoft, this is a golden jewel. It's a game changer that Nadella did this deal.
Game changer. I like that phrase. And aloha, Dan Ives. Love having you on the show.
Aloha.
From Wedbush. Thanks. Coming up, we'll take a look at the IPO market and what we can
That
expect
dude is a legend.
for 2023. It's going to pick up. Maybe. We'll see. Head to break. Take a look at winners and losers.
Dude is a legend. Cool as a cucumber, that guy. Yeah, I remember when AI IPO and there's a lot of hype around it, and then they just way overpriced it, I think. Had like a little rally, but then it was just, this was when everything started selling off really too. Early 2021. But I think they could be right with AI being like a big mover this whole year. Similar to how like NFTs were and EVs were last year. I don't know if we're probably gonna be in a, well, I guess not last year. I guess it was like 2 years ago now. Some into last year, but if we're not in a bull market, I don't know. Might not mean much. I feel like I should get more GME puts. The GME puts do well. And if anything, it'll just cause it to rally, so it's kind of a win-win. No, that's how you say it. Nothing to scoff at. What they were saying, and I think it's true, it's not like this is actually new, it just hasn't really been... The public hasn't really used it. And it's also just getting a lot of hype and media attention right now. So, but if you think like call centers and anything like that, that's all AI you're talking to. Like even if you're talking to a person, they're inputting and they're getting just a generated response. So we've been talking to AI for a long time. We just haven't really had access to it to use it for ourselves. Yeah, most customer service. And you can tell, like, business applications, yeah, it's like widespread AI with it. The fact that I think it just got hype, like this got released to the public and then just got a lot of just trending more or less. So there's definitely a use case for it in a lot of applications. I love automation. Love automation. I think it's awesome. So, yeah. But I don't think it's necessarily that new. Maybe it's gotten a lot more sophisticated in the last, since it's been released, but I'm not so certain. Took a loss. Yeah, you told me you stopped out of it. Yeah, I'm gonna hold it. It was one of the riskier plays from today. It's been a long time since I've just like traded shares, and honestly, so I'm a little rusty. Like going along on stuff, I should be looking at what's the most read and seeing if there's any trend on these. Like I didn't quite do that today. So if anything, plays I opened up today might be read for a day or two, but hopefully the trend continues. So like this is a nice one on the trend up, but I don't know if our market kind of starts to go down next week. I don't know what these will do. That being said, looks like we're about to rally. There are new innovations in AI that made it more useful recently. Yeah, I guess. Yeah. Yeah, I can see that. Oh, I think I read about that. Some colleagues used AI to check the paper written with AI. Yeah, I still haven't gotten an opportunity to play with Chat GPT. I haven't really messed with any of the picture ones either. The AI picture generator ones or whatever. Oh, you're closing out. Yeah, when these ones, I mean, unless if it's gonna be like, yeah, no, that's probably fine. These are sketchy plays, man, and I jumped in on them today. Like, it's not like a good dip buy or anything like that. It was a full-on chase, and more or less to buy now because I'll forget next week when it's down 5-6% to buy on the dip. So, but I missed this chart. Still looks nice. I like it, but it could take some time to keep going. I like Hellbiz for even a long-term play. So, and I think if they do. I think they have a lot of potential if they do start announcing like dividends or that sort of thing, like the same route that GNS went with. But yeah, today's not like a great day to buy when it's up 5%, especially not at this point. But you never know, like you could just keep going crazy. There might have been news there that we didn't know about, so. I mean, MSGM, I don't even know what that was about. That was just a full-on trap. This one I don't have much conviction in. because I don't know even if this was just NASDAQ compliance caused this to start or what. It was illegal, yeah, I took my job. So we've got 20 minutes of power hour. Hurricane is going to get his green candle maybe on this 30-minute candle. I did go long somewhere around here. You can add Midjourney Discord and get 20 free picks. What? Just an AI generator like plugin for Discord? Yeah, I mean, yeah, share it on Discord or something. Are you able to add it pretty easily? I don't. Try to mess with the Discord as little as possible. Yeah, we could make a channel or something for it. I don't know, that could get out of control. Can't figure out hands. Yeah, GNS kind of came down, huh? Oh, now it's fighting. How about 13 minutes for that candle?
And then now you have SPACs. It
Gas
just feels
moving
like
up.
things have gone nuts.
Yeah, listen, I think we're going to normalize, IPOs are going to be more normalized going forward. I do think the direct listing, especially for these, massive companies like Stripe and Databricks that already have a huge investor, following and a sort of a big brand in the capital markets. I think there are a few, companies that will, may still go through the direct listing channel, but I think we will be a return largely to the traditional underwriting channel, the way that companies go public. And I think now it's just a question of, when will these reopen? Underwriters are going to make sure that the next, wave of IPOs performs as necessary, or else it'll close again.
Jeez, what a
IPO
rejection,
investors
man.
need their premium. And if they don't get it, then, the IPO window will remain closed.
Okay, let's get to some of the names that we've been talking about for some time.
It's almost engulfing, but not
sort of
quite.
thought would have been here already, but because of the market conditions, understandably, they've taken and put it on the back burner. Instacart, Stripe would be two names right off the bat that I would think of. You throw out a few others that you think may have been here already, really, if it weren't for the market conditions.
Yeah, I mean, I think, I look at, Stripe and Databricks as two, decacorns. I mean, Stripe really is a centacorn, meaning
What?
in excess of 100 billion valuation. These are companies that would have been
decacorn.
public historically in the past, great businesses, substantial revenues, and great unit economics. So I expect when the market returns, and that I think requires stabilization of our interest rate environment, which probably occurs sometime in the second half of the year. A lot less volatility in the market. I expect that they will file and maybe price this year, and I could see Stripe and Databricks both being direct listings. Instacart, and of course they also have been private for so long that they have some pressure with option expirations and RSU expirations. So I think there is some pressure, from some other factors for them to be public. Instacart, same thing. Now, their businesses, they're in the delivery business, and their comp would be DoorDash, and that's a market that still is a little bit challenged on unit economics. But Instacart has been talking about being public, for the last year, and they've even, they've been pretty much at the doorstep. So I would expect Instacart to have a public offering as soon as this window reopens, and it's probably sometime in early Q3 would be my guess for Instacart.
So let's talk about some themes. I mean, social media, gaming, TikTok.
Okay, thanks, John.
On the one hand, that TikTok is going to be banned, and then on the other hand, it's going public. Let's all invest in it. It's sort of confusing. But anyhow, you have other things that are related to gaming and social media. Are you seeing themes?
I have to join
How
a server?
likely is it that ByteDance comes to market?
Just to add the bot?
And what are some of the themes? Because remember, in 2000, it was all tech.
Or it's just on the server you do it. I don't
It
understand.
was all types of companies.
I hate joining
Are you
servers.
seeing types of companies that seem to be working better than others and actually working? And tell me about the ByteDance. You think that's a real thing?
Yeah. Well, let's start with TikTok. I mean, it's off on its own. It's obviously a behemoth in terms of user base in the U.S. and the amount of time people spend on TikTok is a little bit scary. Obviously, it suffers from both a Chinese and U.S. regulatory risk, which is significant. Of course, we just had this week the sightings of Chinese balloons, and now there's a question of, well, if we're worried about Chinese balloons in the air, then we ought to be a lot more worried about all of the data and information that's being collected potentially by the Chinese government via TikTok. So I actually think this Chinese balloon thing could actually impact TikTok's value, because TikTok, could possibly be banned in
This
the
isn't
U.S.
looking
banned
good.
in certain, public sectors
Got a
already.
bullish MACD crossover,
So even
but-
though its usage is high, so I think that's something that will always be an overhang on the stock. So they're talking about going public in the next 6 months, maybe doing a dual listing, in Hong Kong and here. It's a 300 billion market cap company. It's the revenues and earnings from TikTok are extraordinary. It's just that regulatory risk that's a significant overhang. So that's kind of one end of the spectrum. I actually feel like we're gonna see a slew of sort of safer enterprise SaaS businesses, maybe a little bit more under the radar, because I think the underwriters are really going to be looking for predictability. And so they might not be as sort of attracted to the high octane consumer names, but they might look for a little bit more boring, 30% growing, high net revenue retention, maybe a backup company like Druva, for example, that's been private for a while. So I actually think we're going to see a little bit more of the boring, slightly lower growth, but much more predictable revenue businesses, which I think will be more well received by the IPO market than some of these high-flying consumer names.
All right. Greg Martin, good to see you. Rainmaker Securities, thank you so much. Still ahead, we bring in our panel to talk all about this jobs report. Oh my goodness, it's a big beat. Now what?
Luck's going on about Tootsie Roll. GameStop's flushing through. Yeah, with all the bad data today, I feel like this market could just go dump at any moment. Not sure we'll get that bullish Friday rally. Got 2 minutes. This 30-minute candle, Hurricane. Oh, it's teetering. It is teetering. Tootsie Roll did break out of that. Offer a dividend for those Tootsies? Kind of at the high, but yeah, that does look like a nice little breakout there. Got going on. Fuck. It's a little premature. Hasn't actually broken yet, but 15 seconds on this 30-minute candle. Oh. 5 seconds. 3, 2, 1. It's green. Oh no. I keep confusing it. Never mind. 10 minutes. Yeah. Anyways, the failed delivers. I guess I'll just show you guys what Huck was looking at. There's the FTDs on Tootsie Roll. DA breakout. GameStop squeeze right there. That's right here. Interesting. What was that? A squeeze? Oh, that was the one. SPY's coming down. Very bearish candle on GME today. Yes, I'm gonna hold my shares. My long-term shares, I'll just roll cover calls on it. Take those gains and lose them in the futures market. Seems legit.
Pivot their narrative, and basically geniuses, and this looks like a soft landing. It just depends on whether or not the tightening they've already
Add the
done
bot from there and then leave a server.
worked its way
All right, I'll
through
take a
the
look at it.
system
GME
Tell
new
me why
lows.
this, yeah, and I thank you for that, Francis. Tell me, Ted,
19
your
by
thoughts.
Monday.
I mean, when you talked about a lot of these jobs actually being
Maybe.
good jobs too.
That's a long ways,
I
but
think there definitely is a seasonality
Darth Vader stock
factor,
market.
which
There's
Francis
no hands,
brought
just
up.
stubs.
There's weather. There's all kinds of things that happen. But your thoughts when you saw the numbers?
Yeah, definitely a shocking upside surprise. You mentioned sectors. Leisure and hospitality was the #1 sector for jobs creation. Historically, those have
Yeah,
not
I
been
noticed
great
Getty was ripping.
paying jobs, but a lot of the next ones on the list are quite lucrative jobs, I would say. Professional and business services, government, healthcare. I mean, there are a lot of good paying jobs in there. So I think there's a lot to like in this report. The initial market reaction I thought was a little more positive than I would have expected.
BBBY push last
It
hour.
does seem that this will probably lead to at least 2 more quarter-point hikes.
It's
from
due.
the
It's down
Fed,
almost 10%.
So that'll be something that's worth watching. I saw the odds swing in favor of 2 more as opposed
Got
to the
7
1
minutes
more
for
that had been
this green
forecast
candle
prior
to
today.
populate.
And what did you make? Let's talk more about the wage growth part of this, because the concern, Francis, is that people were going to be losing their jobs. They're already using their credit cards more than they had been at very high rates. The buy now, pay later. They're finding out that their rate is 20%. It's all going to sort of roll up, and at least if they have a job, and that can avoid some delinquencies. Tell me a little bit about the big picture here, Francis.
Yeah, so you have to kind of bifurcate the economy from the lower 60% who's living paycheck to paycheck and the upper 40% who benefits from owning assets. And the upper 40% is doing better. I mean, you had a 17% rally in the NASDAQ just to start off this year. The lower 60%, yes, it's getting more onerous. And inflation, though it has come off of its peak and it has decelerated, prices are still going up and they're paying more for those credit cards. So what we're watching is whether or not we start to see, you see a few things here and there. They're not paying for their phones. They're not paying their car payments. These percentages are increasing slowly, but we're not seeing any massive sign of a contagious credit event just yet. But it really is when that part of the economy breaks off. And again, the quality of the jobs and where the jobs are being added makes a difference as well, and what those wages look like, and if that 60%, ultimately ends up dropping off as consumers. The thing to watch,
I averaged down on EVTL
markets are so
Donero.
anticipatory,
Be proud.
are really 5 things. The
At
10-year,
that $2.
we're not making new
Someone
highs,
else mentioned
even
it
though
in here.
we've had
Actually, I
jump
couldn't believe
today.
it.
The dollar spiked, but it's nowhere near it was. Gold is selling off. We'll see if gold, it's hit a multi-year triple top. So we'll see how far gold goes down. Watching corporate credit spreads, huge. And then just continuing to watch volatility just to see if there's any early indication that the Fed has gone too far too fast, but we just don't see that in the system yet.
And also, thank you for all of that. Also, you know, as you point about what's going on here within the jobs report, the labor force participation rate, 62.4, which the prior one was revised down a tiny bit. It was revised to 62.3.
Revisions.
Shows the labor force going in the right direction. It just doesn't feel real. You talk about leisure and hospitality. We're still
When you called it out, it was ridiculous.
Jobs shorter than we were.
Someone else that's not
we have 3.4%
evil, stupid bias. Now that I can get behind.
1969. Are these skewed here, Ted?
You didn't actually call anything out. I asked you, what do you think about it?
If you compare
He
apples
said,
to apples, are we really at the lowest
average down, dollar cost average.
1969?
You know,
Yeah,
it's
I get dollar cost
interesting,
average
speaking
like
of that, I saw a note
5
the
cents
other
on this
day that
thing.
pointed out how everybody keeps talking about how there are nearly 2
Look at that
available
ugly
jobs for
GME
every one
candle.
person
Get your
looking
puts,
for
guys.
work. And yet, the recent
might be a
hiring
quick
trend
elevator
has been
down.
more ho-hum
Haven't seen big
than
red
that.
on
So it was
GME
like there's all these listings,
for a
but are people
while.
actually getting hired? And then today we had this blockbuster, and it's like, oh wow, a lot of people are getting hired. That labor force participation rate is still about a percentage point below pre-COVID levels. The main feeling on that seems to be that a lot of people retired early, whether it was for pandemic reasons or for a while their investments were way up, their home values were up. Some people may have called it quits a little earlier than expected. Some other things going on too, like caregiving, for example. But yeah, it seems like there's still a good bit of slack in the job market,
4
which
minutes.
is pretty amazing.
That 30-minute candle is not like it's going
And
to turn
Francis,
green.
when you talk about commercial and industrial loans and the financial conditions, what do you think
GME is
we're seeing
dumping.
here?
Well, what's fascinating is because commercial and industrial loans and other lending has gone up since its low in 2021, the Fed has been able to be tighter because remember, they're actually removing liquidity from the system more directly via the balance sheet and future funds from changing interest rates. And these loans are going up anyway. So they're keeping financial conditions very loose. They're keeping a lot of liquidity in the system, which is actually lowering the probability of a massive credit event. And you see that being, priced into credit spreads.
This now looks just like a bear flag
down,
setting up.
even though the Fed is
Dump
tightening
for
more.
power hour.
Which actually, at least that part's a good thing. Francis Newton, Stacy, great to see you. Optimal Capital, Ted Rossman, great to see you as well. Bankrate.com, thank you both very much. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me.
3 minutes. Might get more puts on a GME bounce. Jeez, bye. There's a new low from there. 2 minutes. A little bit of buyers coming in here. BlackRock loaning shares. I mean, the whole market was coming down today. This is pretty much just a SPY. All right, 40 seconds. So we get a huge rip. We're getting a red on the 30-minute. And our hourly's red. Monday's probably going to be red. That daily candle on SPY is also ugly. We get a bounce in power hour though. 3 o'clock. Our sell-off. All right, 411. 411, 12. Finally, after all that consolidation, move further down, but I traded through here until I gave back all my gains. And then some. Shouldn't have traded through there. It's fun to force trades. .3%. This is a pretty big support here, I think. Yeah, this is. Wait, was that all extended hours? Oh no, that was pre-market. So yeah, we're now new low of the day. Pre-market was a little bit lower. Breaking that and not much further down there. Nice, well done, Mark. Yeah, most of my GME shares have been turned into other crappy shares. But yeah, I've closed a lot of my GME shares also. New low on the day for GME as well. 411.12 is that pre-market low. Thanks for sharing, Mark. Appreciate it, buddy. There's not a whole lot below that. There's that gap at 410. Or 1034, I think that's where that line is that gap. Oh no, the gap's up here. Put one on that gap. My cover calls are now closed on GME. They just filled. So those daily cover calls. Close to max profit. I close them out for a penny, I think. So I don't like to hold things, let them expire. It's slowing down here, but yeah, that support was definitely a strong resistance we hit on GME. Even before that, just trying to break out of this channel, just kept wicking out of it. So yeah, probably at least back down to the bottom of this channel, which would be like 20, maybe back down into the teens even. We haven't seen a retest of the low here still, so it looks like we're more in, we might be in this kind of range, or it could be even new lows, which would be like 12 or 10 if this is 15, or we hit here. Depends on the market. If the market really starts to accelerate, we'll probably make new lows. You said teens on Monday, Jonathan. I said probably not. I think it was you, someone. But maybe. Where we close today, I guess. 12, yeah. So that would be that kind of that same pattern from back there. Poor Linux, man. I hope if it doesn't rally tomorrow, I hope he's okay. Or on Monday. We might. I mean, we could get a bounce off the bottom of this range and then a rip still. We've got Powell, I think, on Tuesday, so that could be a catalyst for a rally. Yeah, the candles on GME this last like 3 weeks have been ridiculous. Not just the candles, the patterns, the volume, just a mess. Coming down more. February into March. Is that what I pointed out, or is that a different spot? Yeah, right here. Exactly. Yeah, so what we were thinking for a long time, because once I saw that rocket, it gave me a lot more conviction that we were in this pattern. I was hoping we weren't here, and we were here, but it's seeming more and more like, yeah, we're like somewhere around here. Probably like here. But our downtrend might be more, we might be more closer to here, though. Just got stopped out on that future. All right, whatever. I maybe, if I didn't get stopped out on that after hours earning ridiculous pop, I might have even been stopped out here. I'm not sure. No, I wouldn't have. So I'd be able to hold that all the way through. So good lesson for me. Yeah, it was almost 2%. Would have been 4 grand, I guess. If I waited until now. Okay, well, good. Another good lesson. And today did well, and then traded away my profits by trying to just get greedy and trade through this chop, thinking it's going to bounce right away. Market doesn't just drop and then just rip. I know this, but then sometimes it does, like here. This was a little special, I think, though, because this was a bigger drop and it was in power hour, so a lot of liquidity. This was too early, too much in the middle of the day for that to happen. But I'm going to chalk it up to. There's a bounce on market, GME. It's good thing I stopped out. It's good. Shorting the real economy to pump the fake economy. One minute. Oh, 1 month 60. 1 minute 60. What are you saying? 1 month? Monthly chart? This one? Oh. One month hourly. Yeah, you mean this channel? Yeah. For sure. I don't know if we're gonna bounce off this or not though on Monday. I made a nice bounce there. Setting up an engulfing too. Do I dare go along here? ready to destroy some capital. Down in here, in the 20-something range. Unless it breaks through back to 2050, holding that support maybe, or 1840. Yeah, I don't know if it's gonna keep repeating though. It's definitely rejecting higher than this, like 23. You know, like these were all fine, and then as we got up here, kind of changed a little bit because then it was breaking up against that 24 support, the prior support. So it gave us these ugly candles after a nice bull flag. They should print a whole percent MMT shares. 100% loaned out. I haven't talked about MMAT in a while. And Matt, baby. Okay, 50 minutes. I'm happy GME's seems like it's maybe going to be more rational though. If we just broke out and did a crazy big day, would have been cool, but it would have been not repeating any patterns, which is not what I wanted to see. So if we do come down and retest, I'd rather see that. Because it got me shook coming through here. Long, short, long, short. A lot of slippage lost with the sizing that I have. A lot lost to slippage. SGM kind of screwed up today. Elba is bouncing off that. There's a rally phase. Evital, it's flirting with dumping below that. It wants it, I think.
About the comeback in autos. We traded higher, and then it all just kind of came crashing down for Ford.
Unsustainable.
Yeah, so you said around 8%. It's lower.
The GME rally, yeah.
Well, that was just
it looked unsustainable,
maybe about half an hour ago when it was just 6%.
Oh, we were up right when the market opened.
Especially Vic is why I'm bearish in the next week.
You can see that sentiment has completely changed around Ford today. Now, earnings came in below estimates.
That's true. Powell's been pretty dovish.
Executives there are talking about highlighting.
I don't really mess with the VIX anymore, but the dollar has been rallying. Oil has been dropping.
You can see that adjusted earnings per share missed that estimate, but
sales
sales
divergence
beat the estimate. It was a 17% increase
year
over year for
oil
sales for Ford.
Plummeted
and
today.
The CEO gave January numbers
might see more of the
as
effects
well,
of this next week,
which is a good preview.
But that's probably a good call not to mess with Powell
that it would do this year, reporting a boost in January vehicles for year-over-year figures from the last January reported, and also EV sales rose year-over-year as well. But executives say that they had issues executing fully in this macro environment, in an environment where supply chain and production issues continue to persist, and it caused instability in the company's complete supply chain.
So Ford down big, still has some supply chain instabilities and revenue questions. Amazon down on profit questions.
I haven't played the
today
mega caps in a long time
because they sold a bunch of kitty litter. What does that tell us, Kev? I mean,
this is just a meta sympathy.
What's the message from earnings here? Where today we suddenly kind of reverted back to some of the staple style trades.
Yeah.
You know, when you look at consumer staples, Oliver, it always fascinates me to look at the portfolio that these brands have. You think of Clorox, you think of bleach.
That's right. That's my theta farming boy.
So you
goes right. That's how you win.
Oliver, you know as well as anyone.
Make money on that right.
People do not stop spending on their pets.
Preach.
It is a It is a inflation-proof industry.
That is correct. We do have some experts on the on that realm here. All right, Kevin, thanks, Renita. Appreciate it, guys.
Yep.
Let's talk about the message we learned from the economy here today and whether or not it's to
is that a
blame for the
surprise?
stock sell-off. Jeffrey Cleveland is a principal and chief economist at Payden Regal. Jeff, welcome back to the show.
Big wreck.
Long time no
Good to see you,
chat.
Oliver.
Yeah, absolutely. So this shocker of a number today, we kind of get the classic response by markets suddenly questioning some of the dovish tone.
Maybe up here, 413.
Over the last month or two, though, it's still been pretty solid. What's your view right now on how markets and the economy are interacting?
Well, I heard your soliloquy earlier, so I think it's interesting situation. It's always difficult in real time to know what's going on. There's always confusion. There's always uncertainty. But I think what we can do, Oliver, is we can eliminate some of the scenarios. And one of the scenarios that people have been propping to me, especially the last 6 to 8 weeks, is that we were on the cusp of an imminent recession, and that was going to force a Fed pivot, and that was going to bring rates lower. And I think to some extent, that view was supporting risk. I think you saw that also with the rates rally, with the sell-off in the dollar, et cetera. And when you see a 517,000 NFP number, I think maybe that's an outlier, but even the 3-month average is so strong, Oliver. We're talking about 356,000 jobs over the last 3 months, upward revisions to prior data, unemployment rate at 3.4%. We're not in a recession. We're not on the cusp.
You can
of a
build
recession,
strategies,
and that
Ace, with
means
options.
Probably the Fed is going to keep hiking, and
You
going to
can
keep
build
rates high
strategies
for longer,
around
as you noted.
not just selling
I think
premium,
that
which is what you're
disappointed
talking
the
about.
market in the near term, if they're
Making
hoping
money
for
with
that
it going
Fed
right,
pivot.
but
Longer term, though, I mean, this is great. We have an
you should look at
economy
just
that's
option
growing.
strat just to get an idea. Like,
It could end up being a
if you
soft
think it's going to
landing.
just
We
stay
can't rule
flat, you
that
can
out
make
here.
money. If you think it's going
So
to
rule
go
out the more
up or down, you
dire
can make money.
Macro scenarios, and
No matter
just
what the thing
deal with it
does, you
from
can
that
make money with it with
starting point.
options.
I think that's what we can do
If
today.
it just goes right, you make money by
Jeff
selling
says
premium.
The odds of soft landing increasing also increase the odds of potential inflation turning back and going higher or being unable to break down. If we've kind of taken out the first order supply chain inflationary effects, does this soft landing potential increase the demand side inflation risk?
Well, I'm going to be a bit of a heretic here on your show, at risk of being not being invited back to central bank meetings or some of the macro community. You can have growth, Oliver, without an inflation problem. This whole idea that if the economy just keeps growing, that we have
Pretty
inflation
good
that's
bounce.
just this real problem.
Look for an exit on my long.
That doesn't happen. We grew
Move
throughout
the
the
view up would be
2010s
dope,
with
but
pretty low inflation. So I think it's difficult right now. There are some unique factors that drove up inflation. Give it enough time. I think
Yes, we
inflation
still have-
will settle
still have
back
like
down.
40 minutes.
Maybe that's not first half of 23, Oliver. Maybe that's later. But I think it will happen. And that may be the key thing from the press conference actually the other day with Mr. Powell. He said, "Hey, we've hiked. We've seen some progress on disinflation, and the labor market has not deteriorated. This is
someone's talking
actually a
about
good scenario,
Bingo
and
and
that could
NVIDIA
continue,
partnership or something.
to play out. So I just want to leave that
what?
out there. The probability of a soft landing in my mind is much higher than
Kind of
we would have
interesting.
thought 6 months ago.
Jeffrey, the notion of growth coming without inflation is a very important one because certainly it does happen. We kind of grinded a slow growth.
Dollar's
out
moving up
before
with this
COVID.
move
We
up.
didn't really have
Okay.
much inflation. It was a slow growth, but it still was growth without inflation. It was problematic. Can you do that though if the economy troughs, bottoms out, and starts to warm up when your inflation is already where it is today at 5%? Because the price of bacon is where it's at, and now I'm going to buy more of it, or whatever it is I want to buy. Is that a different starting point? Does that starting point matter?
I think there's some unique factors here. On the supply side, obviously, the labor shortage. I mean, if you want to criticize the jobs report, we're still below where we were pre-COVID on labor force participation. So we have a shortage of workers. That might keep wage growth stronger. I guess where I depart ways with a lot of people is that doesn't necessarily mean inflation. You can have wage growth and still have pretty
That's
modest
interesting. I
inflation.
know.
It's not,
I was like, what?
It's not a bad thing in my view if the average consumer is seeing decent wage growth.
Yeah, do
so
Robin,
that
do
doesn't
cover calls.
mean that it's a terrible situation that the central
Or you could
bank
do
needs to
Thinkorswim.
stamp out. And I guess we'll
TD's
just have
good.
to see as the year progresses.
This one.
I expect inflation
This
will
has a pretty
moderate.
nice
We'll get goods prices,
user interface too,
back below zero
on their
and
mobile
we
as
will
well
get
as
a slowdown
desktop.
in rents, and then
Well,
maybe
desktop's
some
pretty
softening on the services side.
crazy, but
and maybe
very
by the end of the
powerful.
year, we're 3%,
And you can paper
3
trade
to 3.5%
options, you can paper
on
trade
core
futures.
inflation. This is, I think, a much better environment than I think some people had in mind
I don't know
last
if you can
fall,
paper
when
trade
they thought
on
we have runaway inflation. The Fed's going to have to
Robinhood,
really slam the brakes, send
or
us
paper
into
trade
a
options
recession.
at least.
If
Or
we
maybe
do
you
have this
can
sort
now
of
actually.
moderation,
Paper
this
trade
soft
options
landing,
on Robinhood.
maybe the Fed hangs out 5.25, but doesn't need to crush the economy. I think it will take time, but eventually the markets will wake up to this, Oliver, and they say, "Oh, wait, this is not this dire scenario that we had forecasted."
Jeff, what level of inflation do you think we need to see for the Fed to be able to stop after this?
GME is just moving up with SPY.
Just real fast.
Same,
I know you
same
mentioned
bottom,
that you think we
same
can get
timing.
down to 3 or maybe sub 3.
Yeah, a little bit.
If I heard you right, is that a level where is that sufficient for Powell to stay off the break?
Yeah, because they don't need to keep hiking just because inflation is above 2. I think they need to be confident that over a reasonable time frame, say the next 18 months or so, inflation will get back to 3% or below, closer to 2.5% maybe at that time. But this year, I think they would be happy if we were in that 3 to 4% range. The unemployment rate's at, I don't know, 3.3, and the economy is not in a recession. This could be the soft landing. I'll just play devil's advocate here today.
All right. Well, the title of your note. So you're telling me there's a chance. I like it. All right. Thanks,
Interesting.
Jeff.
Data processing.
Have a good weekend.
No
Appreciate
mapping.
You too, Jeffrey Cleveland, principal and chief economist at Payne and Ringel.
There you go.
Let's talk with an investor when we come back about what this means on where to put your money. Did something meaningfully change this
Yeah,
week?
it wasn't new. I looked at the stock. I'm like,
and
well, I don't see any
for
movement from
2023,
it.
which of course have so far been the exact opposite.
We're at 30 minutes. Oh. Genome. I like to say gnome. Gnomes are much cooler. Genome. Got calls inputs. A nice little limitation. Yeah, Fidelity's pretty cumbersome, at least the browser version of it. But it has some cool stuff too. I don't use the Active Trader Pro that much. That's all Donro uses though. He likes it. Yeah, TD Ameritrade. It has that's where we did this paper. This is TD Ameritrade. So this is the Thinkorswim's the name of their like trading platform. This is just the desktop version. They have well, that's the browser version rather. They have a desktop version, which is a big scary looking thing that if you learn it, you could probably be really fast on it. I've never spent the time to learn that one. But the browser version's cool. Yeah, you have paper trading on options, futures, stocks. And the UI isn't bad. But if you can paper trade on Robinhood options, that's not a bad one for simplicity. I don't think they do futures on there though. Mapping GNOME locations and building a GNOME owner community. Gonna have tens of subscribers. All right, Jonathan, thanks for cruising by, man. Thanks for that link. I will check it out. They're cloning gnomes, yeah. Gnomes exist, yes. Dude, you gotta gotta get around a little bit. You don't know about gnomes. I don't know if we're gonna get a break through this. We're about to get the hurricane 30-minute green though. We only have 30 minutes left to make much action on it. Be cool if I went back green today. GNOME futures. Gotta find some. What's this guy talking about?
4.75%.
Poppy.
These are the highest rates we've seen since 2007. We do expect possibly another 25 basis.
Fidelity. Actually, Fidelity's app is pretty nice. I don't know if you've looked at their app, but it's pretty intuitive. It's got a pretty nice GUI. If you already have Fidelity, I would get the app. But if you're not trading on an app, it doesn't really matter a whole lot. But if you're ever on the go, it's not bad.
Participation rate ticking up slightly, which means there are more people coming into the job market, and as expected, and the hourly wage numbers came out as expected.
All right, we're gonna move back to
so
VWAP.
we're not
Let's go.
seeing that negative surprise that we
Break that
have
resistance.
seen in months past, as far as
Bulls are not sleeping.
2022 is concerned.
With all of this, there's been quite a bit of volatility in bonds this week, but
Yeah,
the
thanks
end
to Robinhood.
result is that we're looking
They
at the
made their
same
app better.
10-year yield we have for much of this year, 3.5%. How important is the stability of the Treasury market right now to these big changes that have happened in leadership and investing styles just within the calendar year so far?
I think it's very important. If you look at the short-term Treasury rates, and I'll reference the 3-month Treasury bill as the example. Short-term Treasury rates right now are at 4.6%. They've tracked up.
I might actually get into a short before futures close today.
Over the past
I'm like the whole over the weekend, but
October of last year,
I think I might.
we saw 3-month rates at 3.75.
Yeah,
now they're at 4.6.
hourly, that's a nice little
almost up
bear
100
flag.
basis points.
Bearish MACD.
Long-term Treasuries, as we look at the 10-year rate, you're right.
Unless this is just a
it's held
big
in
bull
at that
flag.
3.5%. Those rates last
Yeah, I'll wait. I
October,
don't like over the
we were
weekend.
looking at the 10-year rate at 4.25%. What that's telling us, and what the market is telling us, is that the long-term rates are a harbinger that of the future economic activity. And it very well could contain inflation. If anything, given the strong numbers that we saw today, there's a greater possibility that the Fed may actually achieve its goal of lowering inflation and creating a soft landing. Although overall market is tending towards a recession, but given these numbers and the trend that we've seen for the past few months of strong employment and moderating inflation, I think that's a positive sign, and I think the Fed should be very much encouraged by that.
Okay. Now, the encouragement, as we talked about with our previous guest, does it have a limit to where inflation stops cooling
I'm getting out of
and
that.
it forces a more hawkish stance within, kind of pushes us back to 2022? How do you, as an investor, balance being involved
Getting
in
a-
what's
probably a
working here
30-minute
so
green
far
candle,
in this kind of hopeful soft landing regime,
That's rejecting
with
that.
the risk that there could be a
Good.
flare-up that sends us back into a problematic inflation regime?
Okay, I need to do my video recap. I'm gonna go over the trades today.
Inflation,
TA.
we saw the tremendous increases in inflation
Look at
last
the
year.
paper
It
account,
it
covered
has put
calls.
strains on the
Making money on
economy.
Theta. It's been
Consumer debt
too long.
is much higher.
Feels good.
Oil prices.
Lost a lot on
you know,
MSGM
just
today,
the
actually.
general cost of living.
We'll go over it, though.
And I think that has squeezed out a lot of that. We don't expect to see a large, we don't.
Thank you guys for your likes. Appreciate it.
Of
Your
the
subs.
inflation that we saw last year.
Your
and I'll
bell
go back
ringing.
to, you know, my comment before, as far as
Appreciate it. Have a good
looking to
weekend.
wring out
We'll see you on
inflation
Discord. See you on the
and,
video.
achieving that goal.
Fun times. Quite the
Right now,
week.
a couple of the funds
Not
that
the
you're looking at
recap
that you
everything
like,
that's going on this week. It's
T-bill,
crazy.
O-bill.
Okay.
Tell me
Thanks,
about
guys.
the
We'll see
bills,
you.
Judd.
Well,
Peace out.
let me, if I can back up